Hello everyone, welcome to another stream. Give me just 1 second to handle something in the back end. I need to send James the link. So let me double check if I did that correctly. Yep, I think I did. Bura Nalim says, get your coffee, sip and poop now. Well, that's definitely a strategy. Mike Wilson, good morning. Harsh, I'm doing pretty well. It's a good Friday. The heat is a bit lower today. So yesterday we had like 38, 39 degrees Celsius. And I'm stuck here in the inland of Croatia. So I don't have the sea, I can't swim. And it's a bit, let's say, depressing, but I'm going to go to the seaside. So that's going to make things a bit better. Good morning, let's go. Max, welcome. Gold up on news, joining soon today. Good Friday. I enjoyed the wake up with gold, reclaim the high. Good evening from India. Good evening. Gold. I have seen gold looking very healthy. So gold crossing the 200 EMA, this is starting to look really, really constructive. I really like the move. There's a lot of momentum behind it. I think the edge finder is giving a bullish print as well, which is an added bonus. So let's take a look at the gold. Yeah, very bullish, score of 8. I think so. You're getting a trend line here, which has been broken. Okay, the trend line has been broken, and now it's possibly time for us to go up. I think this is mainly because of the dovish Fed. So a Fed that probably is not going to take care of inflation, and we will have elevated inflation. So gold rallies on that. Now, personally, I don't think we go to all-time highs in the next few months. I don't think we go near 5.5K anytime soon, or maybe 5K. I don't know. It's very optimistic. 470, 480. I would say that's fine. Okay, or 4.7, 4.8K. I would say that could be achievable in the next few months. The main problem that I have with gold is if you do some back testing, you will notice that gold often has, after a strong rally, see, this usually happens. So you get a big pullback, which you already got. Then you possibly get a relief rally, which we can play right now. And then you basically get flat price action. So if I show you another example, here is another example. So you get a huge rally, pullback, and it kind of, well, this is the pullback right here that we just got. This is the relief rally. You can say this is the relief rally. And then it finally drops even lower. So that's kind of my concern. And that's kind of the reason why I don't think all-time highs are likely. But 4.7, 4.8 could be achievable or is achievable. I'm looking for buy setups, although I would like to get a pullback. I think buying right here, the price is overextended. The price is massively bullish. So if we can get some sort of a pullback into support, that would be a bit better. Okay, pullback into support, that would make a lot of sense. I do like also that we crossed the 200 EMA on the daily chart. That's a bullish sign as well. So perhaps we go up a little bit more and then kind of correct, retest the 200. That could be a good entry point as well. But yeah, 4K level wasn't broken. I think that's pretty good. I think that's pretty constructive. I do prefer, my bias was for bearish gold, but I do prefer a bullish gold basically because you have an extra confluence when you're buying, as gold is a positive skew asset. So over time it moves up, which means you have, I don't know, maybe 55% chance if you 55% chance of a winner if you buy, and a 45% chance that you lose when you buy. Where when you're selling, you have that added negative confluence that the positive skew over time will push gold to the upside. So the probabilities when selling gold are automatically against you. And that's the same with stocks. It's the same with Bitcoin and any asset that has a positive skew. Oil is down on the day. Let me just see if we go to the monthly chart for oil. See, for oil, okay, well, this chart is definitely not helpful at all. This one is better. Okay, this is a long one. Yeah, this is fine. Oil, I wouldn't say has a positive skew. Well, it should have a positive skew because oil is limited in supply. So over time, yes, it should be going up, but we are now basically at the level that we saw in 2006. So yeah, you can say it's going up over decades. You know, if you look at the price from, let's say, 1973, yeah, it's definitely overall going up, but it's not such a clean trend like you're getting on the SPY, like you're getting on gold, like you're getting on Bitcoin. So there's a bit of a difference. Whereas currencies don't have a positive skew. They just kind of range around. So you can say that we are now back at the level from 2003. And we can go to USD JPY. Unfortunately, we're not getting so more candles in the past. But yeah, you can see that there's not really a positive skew when it comes to currencies. So your trade management is a bit different when it comes to currencies compared to gold, SPY, and positive skew. NFP, I did see a comment talking about the NFP today, and a very important event, definitely the most important event of the week. What is the forecast? 85K is what the analysts say. You can go to Polymarket and we can go to NFP. How many jobs added in July? What's the volume? Well, the volume is still really small. But basically 50% chance, or the highest chance, that we get 50 to 100K. Pretty similar to what you're getting from analysts. You can also hit up Kalshi, NFP. Can we do NFP? Okay, so you're getting the July unemployment. What is the volume here? Not exactly sure what is the volume here. But the spread is pretty bad. So I'm guessing the volume is pretty low. Anyway, Kalshi says the same thing. So 22%, that it's between 50 and 100. Unemployment rate stays the same, I believe. Yeah, 4.2%. That's kind of how I'm seeing the situation. Is it tradable? Is the event tradable? For me personally, it's not, because I'm not seeing a massive edge in trading the NFP this Friday. But maybe long term, after the number comes out, maybe it's a huge miss, maybe it's a huge beat. That definitely changes the situation going into the future. The best case scenario for me would be that we get let's say a weaker print than expected, and then I can just start selling dollars. I think even with the Middle East looming in the background. So with the price of oil, that that is staying elevated, I still think selling the dollar could be a good play, could be a good trade. So let's go through the rest of the comments. What's your takeaway on NFP? So we just covered that. Silver breakout. Yes, so silver gold, big correlation. We can take a look at silver. Nice breakout, absolutely. I had a long position on the 15th of July, got taken out, and then it continued higher. Okay, so unfortunately did not work out for me, but it was a good trade. The probabilities were with me. Just the stop loss placement wasn't the best. So yeah, that kind of sucks, but it's part of the game. I should probably make my stop loss a bit bigger overall, because the same thing happened on the Nasdaq. You can see I tried to pivot to risk on after the Fed meeting, and that didn't work out either. So let's go to silver. I think gold looks a bit better. I think gold looks a bit more constructive, with a bit more volume, with a bit more push to the upside, breaking the 200 EMA. Silver is just ahead of the 200. So if I was to pick, I would prefer to buy gold. Nasdaq, what is your view on the Nasdaq? So stock market looks healthy as well. It definitely looks healthy. The SPY sitting here, not a big pullback, not a big correction. I think maybe forming a base. So the cleanest, sorry about that. The cleanest market moves that you can get is a flagpole and then a base or a flag with a minimal pullback, and then you go up. So this is looking really constructive, really clean, and I would say pretty bullish. GP Swiss, Jeremy, welcome. NFP might be lower. I also did some work, did some reading, and I haven't seen any evidence that we get a weaker NFP. I just don't see it. If we look at the jobless claims, so if we look at the labor and the claims, you can see that the claims are pretty low, especially when you compare it to a bigger sample size. So let's go to years. Can we do 4 years? Let's try that. Yep. So you can see latest numbers are kind of lower than most of the previous numbers, lower than the average or the median, I would say. So let's zoom back in. Let's do 1 year of data. Yeah, on the low side. So I would say the jobless claims are telling us that the jobs market is doing fine. So the jobs market is doing fine, and there's not a massive reason for concern or a massive reason to predict a lower print. Max says, Marco, we are starting to see some yen moves. Okay, let's take a look. Well, maybe yen weakness. So Swiss yen is probably going up. The only trade I'm currently running, actually, sorry, I'm running 2 trades. I'm running Swiss yen and I'm running SpaceX. I have a long trade on SpaceX. So Swiss yen up a bit on the day. The JXY is going lower. So I would say yes, definitely a bit of a move. I think we can go to the currency strength chart. No. I wanted the one with the lines. Ah, this is it. So currency strength chart. Okay, yen starting to kind of fall over a bit. Yeah, okay. Well, interesting. Is this a concern for my position? I wouldn't say so. I'm betting more of a longer term. So this is more of a longer term hold, longer term position, a longer term bet that the yen continues to lose value. Maybe another intervention, maybe a hawkish Bank of Japan or a surprise rate hike. Maybe the pension funds that have started to sell their foreign assets and buying domestic, maybe that actually starts playing out more and starts propping up the yen, or Scott Bessent does something, because this time you don't just have the Bank of Japan trying to push the yen up. You actually have a joint effort between Japan and the US. Makes things more, let's say, volatile, or the moves more powerful. That's why on USD JPY, if you look at the size of the move, it was 5%, and usually the interventions are 3 to 4%. So this is definitely bigger than usual. If NFP comes out at 75K, is that still good for gold? Yes, I would say it's fine for gold. Marco, your NAS and silver longs was on spot, but a bit early. That's what it seems, yes. And the stop loss was a bit too tight. But it's part of the game. My win rate is below 50%, so actually half of the trades that I take will be losses. Same thing happened with my Dow longs and NAS shorts. Yeah, it's part of the game. As long as you have an edge over 100 trades, that's the most important part. And of course, keeping losses small and winners big. That's kind of crucial. That is the name of the game. Are you saying NFP won't be big? I'm saying it. I'm saying it mostly comes out as the forecast. I think it comes out maybe 75, 80, 90K, something like that, which isn't really going to be a massive move because the market has already priced in an okay NFP. If you look at the previous NFPs, so let's look at NFP. Yeah, so a print of 85 would be totally fine in the grand scheme of things. A massive surprise would be something like 172 or minus 92, or let's say 20. That would be a big surprise as well. So going into this NFP, I don't think I have a massive edge in positioning before it. I'm waiting to see what will happen. I'm waiting to see the numbers, but I think they come out pretty close to the forecast. So I don't think there's a massive edge in trading the NFP. I do want to mention, if you want to get the edge finders, if you want to get this software, which I use on a daily basis to structure trade ideas, for example, gold has a very bullish reading at the moment. If I show you gold. So gold has a very bullish print, score of 8. It looks at many, many different things, technical sentiment, economic growth, inflation, jobs market, and gives you a cumulative reading so that you can go ahead and execute in this case, a buy position. So at the moment, I'm very interested to look for buy setups on gold. I just want to get a bit of a pullback because the price looks overextended. So if you want to get the edge finder, you can do so, and you can get 15% off with the code Marco. Okay, that is the discount code. This is for the Edge Finder, and it works for the A1 Trading Discord. Now, all of the links are in the description of the stream, or you can just go to A1 Trading Edge Finder on Google and you will find it with ease. Okay, I'll also post the link to join the free Discord, so you can also join the Discord for free. I will post that link right now. Give me 1 second. So stream links, free Discord. Post. You can find it in the comments. So you can join for free. You can try it out, see if you like it. See if it's for you, and then become a paid member if you choose to do that. You can get, so if you're a paid member, you get all of my trades. My latest trade was on SpaceX. So the one before that was on Swiss yen, which is a massive runner. I had one on the Nasdaq, which was a loss, and the latest one is on SpaceX, which is doing fine actually. So SpaceX possibly starting the relief rally that I was talking about. I speak lower time frames. The yen index is not open yet. I speak about that recent spike. Okay. So JXY is not yet open, and yeah, probably because there's no countdown here, and yeah, the market is closed. Okay, I missed that. But if we look at some yen pairs, well, I'm really not seeing a massive spike on UJ, GP, JPY, Swiss yen. Yeah, I'm not really seeing it, so not sure what's going on there. Just tell me something about gold. If NFP comes in weaker, chances of another intervention can go up. Retracement is important. Dow Jones still bullish. Sluggy says, I'm expecting the same on the yen side, could become a larger unwind. So the trades that I see at the moment to sum things up and to actually give you some value from this live stream, first one is buying the yen. I think the yen is a good bullish play. You can sell Swiss yen because the swaps are going to be minimal on Swiss yen. I think long term, the yen continues to gain value. So that's the bet. Now, when it comes to the US dollar, if you're a professional trader, you need to have a view on the US dollar, an approximate view, because whatever you're trading on this list, it is impacted by the US dollar. So by the DXY. The DXY is tough to read. You have contradicting forces. On one side, you have the Middle East, okay, because essentially Middle East, Strait of Hormuz is closed. Strait of Hormuz. So the strait is still closed. It's putting pressure on inflation, and it's bidding the dollar to the upside. On the other side, you have a dovish Fed. Basically, yeah, that you have a dovish Fed, and you have, well, I would say, risk on in the market, which is pushing the dollar down because the risky assets are attracting capital. So money is flowing out of the dollar and into stocks, into maybe Bitcoin, but not so much, and into gold. Gold is not a risk on asset, but you can see the massive rally in gold. So what I prefer to do, if I had to pick, am I bullish on the dollar or am I bearish on the dollar? I would say I'm bearish. I would say that I'm bearish. My game plan is to wait for the NFP print because I think it actually prints as the forecast, which could give the dollar some strength. To wait and see what happens with the Middle East today, because we were supposed to get the opening of the strait this week. It's probably not going to happen, I know. But then for the next week, I can start to look for shorts on the US dollar. The way that I'm looking to play that is gold is the first one. I want to buy pullbacks of gold because I think gold is a good bet if you're expecting a stronger US dollar. And then I'm looking for a currency to pair the dollar with. So I'm looking for a currency that would be considered strong. And I'm having some trouble on that front because there's not a lot of stuff on the list that is actually strong. Most of the currencies are, in my opinion, not so great and acting a bit weak. So the first game plan is to buy gold. Second game plan will be to find a strong currency, maybe the Aussie dollar, maybe to the upside. Just remove this. That could be an interesting play. Yeah, we'll see. So that's my stance on the dollar. That's what I'm looking to do next week. Today, I don't think I will take any new positions. I do love stocks. So stocks are doing a really good job. The SPY is at all-time highs. The pullbacks are minimal for now. The Qs looking fine. The equal weight looks okay. The MAGs starting to recover. The semiconductors are not looking good. So the semiconductors, and do we have, I want to find software as well. Is that GDX? No, that's not GDX. The software ETF. I'm not exactly sure where it is. I forgot the name, but I'll find it. So anyway, semiconductors not looking so great, which is a bit of a problem because the last breakout that you saw in April right here was mostly led by semiconductors. Now the breakout seems to be led, the breakout on the SPY seems to be led by stocks, or sorry, by software. So because the SPY is at all-time highs, looking bullish above the 50, the 20, and the 10 EMA, I'm starting to look for breakouts on the individual stocks. I have my list assembled. You can see how you have the flag pole, and then you have the flag forming. You have the base. I'm looking for a breakout out of that. So that's the general watch list. I did try and take a stab at HP. Didn't work out. I got stopped out. So we'll see. We'll see how that develops. But I do like that stocks are heating up. So some of my attention is actually going to go to stocks now. Although the problem with that is I can't trade them on my prop firm accounts. I can only trade them on my Interactive Brokers account and some of them on my DarwinX account. But on FTMO, maybe Ola Prime, I'm going to have to take a look, but I don't think you can trade them on Ola Prime. So for prop firms, stock trading is not yet developed, and the spreads that I saw on FTMO are pretty bad for stocks. So that's kind of the downside, that my capital for trading stocks is much smaller. That's what I'm seeing at the moment. That's where I personally think the edge is right now. So those things, Swiss yen. So selling Swiss yen, buying gold, buying a currency against the dollar, and buying breakouts on individual stocks, and of course SpaceX. But this is more of a shorter term position where I'm looking to take profit somewhere around 130 if we get there, something like that. That's the game plan for SpaceX. So I'm leaving that kind of on the side, seeing how it will develop, and just monitoring the trade. Marco, are you still in Swiss yen shorts? Yes, I am. USD JPY. I changed my mind on Aussie NZD shorts. I'm no longer bearish. Yeah, so Aussie NZD, well, I'm looking at it, and it personally doesn't make much sense to short. Like, you would be betting on New Zealand dollar strength, and there's already a bunch of rate hikes priced in for the RBNZ, like a crazy amount of rate hikes. So I don't think that's really the right way to go. I think the New Zealand dollar will be a bit weaker in the upcoming months, especially comparing it to the Australian dollar. I don't like it. And we haven't really broken down the support. So it's not for me. Narrative changed. Possible trade on GP Swiss. Would you like for the long term? I don't do long term. I mostly do short term and kind of medium term. You can say long term is not of much interest. You can do DNA. Yeah, DNA funded. Just don't take any USD Forex. Bet the stock is a USD exposure. Yeah, so DNA funded has a bunch of stocks. That's definitely an option. What's your view on gold? True, but the availability on stocks and DNA is kind of limited. Some are available, some are not. That's true as well. Like FTMO has stocks. Ola Prime, I'm pretty sure, has stocks as well, but they may have only 40, 50 names. That's not enough. I'm mostly trading mid caps, and I need like a selection of at least 1,000, maybe 800 to 1,000 would be minimum. Interactive Brokers has every single stock pretty much. DarwinX has like 800 stock CFDs. Prop firms, they have maybe 50, maybe 100, something like that. That at least according to my research. So hopefully we get some sort of a prop firm where you can actually trade stocks and it's liquid, like the spreads are not super shit. So that brings me to an end of my segment, or my first segment. You can catch me again later after the NFP. I'll be doing a joint segment with Alan. So we'll get the NFP print, do join, because I think it's going to be important for future trades in the next week. Do not go anywhere because we have James coming on in 30 seconds. Thank you for watching. Gold does look great. I'm looking for buy setups, and I'll see you in 2 hours. So yeah, that's it. Let me just put on the the mid-roll. Okay, yeah, goodbye.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hey, happy Friday, ladies and gentlemen. Hope everyone's well. Hope you've all had a fantastic week. It's good to be here again. Excuse me. So yes, NFP today. I hope you have all gone full margin. I'm going to be very, very disappointed if I hear that anyone is actually managing risk today. We want to have a little bit of fun. 100% margin on gold, please. Of course, I know there's going to be someone out there that might take that seriously. So I've got to clarify, that's obviously a joke. You know, some people might sit there and say, oh, how could anyone take that seriously? You would be very surprised. The people we have to talk to as content creators, I mean, obviously I'm very small, but trust me, the type of DMs that we get is nuts. It would blow your mind. Anyway, hi James. Euro Swiss, Pound Swiss longs are both worth taking a look. Currently, both nearing fib projections and the edge find. You know what, Christoph? I need to build you as an indicator on TradingView. You seem to find my own type of setups for me, which is fantastic. So let's have a look at Euro Swiss. Alan, good to see you here, Alan. And King of Kings, good morning to you, my friend. So Euro Swiss, what's going on here? I've lost. Hold on. How do I fix that? There we go. Okay, right. Back on track. So Euro Swiss, what are we looking at here? Do we have an edge finder reading? First of all, we do not. So that's a little bit of an issue. So we're going into this trade with no fundamental buyers here at all. However, we can definitely take a look at the technicals, because what we are seeing is a bit of a drift to the upside inherently on a lot of the Swiss pairs. Now we have, you know, been talking about this weekly time frame thing for the past sort of 2 weeks, so I'm not going to harp on it again today. I'm going to speak about it now, and then we'll leave it going forwards. So what I mean by this weekly time frame thing, for anyone that doesn't know what I'm talking about, on a lot of the Swiss pairs, Euro Swiss, New Zealand Swiss, Pound Swiss, I think Dollar Swiss as well, what we often see on the weekly time frame is a very, very large downtrend. Now, there's two things to understand about these Swiss pairs. Generally speaking, in fact, no, not even generally, I think literally speaking, on all of them, they're going to be positive swaps to the upside. So you're going to be you're going to be getting paid to be a buyer, but you're going to be getting charged a considerable amount of money to be a short seller. So again, just that dynamic there, because these are very expensive markets if you're on the wrong side, or you're stuck in a loss or a range. But what my point is here, if we are trading Swiss pairs to the long side, like Pound Swiss is getting a bullish reading, it looks good, the technicals are fine, and a lot of these Swiss pairs on lower timeframes like the H4 do look good to be a buyer. But this weekly time frame does pose a little bit of a problem. So on this market, what we can see on Euro Swiss is this 50 weekly moving average continuously is getting used as resistance. And when we do manage to break above, it's very, very short-lived, and we end up reverting straight back down and continuing lower over time. So my point here is that if we're trading these Swiss pairs, like Pound Swiss is another good example, we might not want to do, or, you know, I don't know how you trade, but I often trade without a take profit. I will try to trail stops as much as possible and then manually close out around 3 to 4%, typically speaking. On a Swiss pair, I'm not going to do that. I would have a hard take profit around a weekly 200 moving average or 50, depends on the exact market. So I just want to clarify sort of the exit idea potential on Swiss pairs while we're on it. Okay, so let's have a look at the setup here. So what do we have? So fib from the low to the high. We don't really have any structure inside of this fib zone, apart from the previous support level through here. There's cats meowing outside. So yeah, there is nothing inside this fib zone apart from the previous support. That doesn't really, it's not a trade breaking thing by any means, but it is something I like to, just use as a bit of extra confirmation. So in this case, I would be quite happy to maybe look for a long position off this 50% retracement. Stop loss would have to be at the low just because the 200 moving average is still quite far below price, and this is kind of the only stop loss area I can see. And then, of course, looking for that continuation higher. But again, as I said earlier, there's no fundamental backing here. There's no edge finder reading. So I'll be honest, this is sidelined. On the other hand, pound Swiss is a different story. So pound Swiss is getting a bullish reading of 6. So this could be an alternative if if you're looking to trade a Swiss pair. Euro Swiss may be in a void trade at the moment, whereas pound Swiss could be the better option. And again, the swaps to be a buyer on this is great. So the idea of being long is completely fine. Stop loss again at the low here on the, oops. Why does that keep happening? I keep shortcutting buttons. I don't know how I'm doing it. Anyway, stop loss at the low allows room for the fib, allows room for the previous structure, allows room for the fib. So we've got a lot of potential supports here for price to potentially bounce off. It gives us a lot of breathing room, or a lot of chances for price to bounce if needed. And then, of course, the continuation after this retest of the previous level. Edge finder's bullish. Everything seems fine. But again, quickly, just to clarify, this weekly 200 moving average might have to just be a hard take profit type level. So you might be looking at around a 1 to 2 here. Again, that's just the way I'm looking at it. Yours could be different. Excuse me. Right, let's have a look at the chat. Christoph, let's do it. Yes, let's go full margin. Jeremy, hello. Good to see you. Hello, James. Bulls or bears for Eurodollar? It's interesting you bring up Eurodollar because I am currently short. We'll see how this works out. We could be getting stopped out later today on NFP, or we could be in some pretty nice money. Now, Eurodollar is a tricky one. I did get asked in my Discord this morning, like, why am I still in Eurodollar? Because it's breaking sort of my core rule. So, anyone that watches my segments will know, my basic workflow is edge finder bullish or bearish, look for the trend in the same direction on the market, and then I'll look for the pullback and, in the same direction, or sorry, take the trade in that same direction. Now, Eurodollar is a different one because it is bullish, but I'm short. So I'm counter trading really my own system in some aspects here. But the reason I'm short is because I'm not convinced that the US dollar is going to continue to weaken that much further. It could, I'm not saying nothing's guaranteed. So don't take this as gospel that Eurodollar is 100% going to go lower. So it's just another trade, it could just not work out. But the technical side still looks really good. So we're holding on to this 200 daily moving average, showing quite nice rejections twice. I think if we were going to break higher, we probably would have done it by now. Again, we do have news that could be the catalyst for it to break higher. We're still holding this fib zone, which also lines up with previous structure on the left. So the technicals look fine. The daily's in a downtrend. We're still within a reasonable pullback as far as I'm concerned. And as I said, I am still quite optimistic on the US dollar. I don't really have much of a reason to be bearish at the moment. So the fundamentals are, yes, bearish. If we go over to, where are we looking here? The heat map on the US is definitely looking dismal. It is by no means good. So this is, one of those things. Oh, yeah, the dollar's bearish. But I don't think the US and Iran situation's over. We've had multiple headlines, and if we go off the data we've got historically, it shows that actually we shouldn't trust the headlines and we should counter trade it. Eventually that will stop working when obviously a peace deal is reached. But again, based on just the historical headline development within surrounding the Middle East and Strait of Hormuz, actually we theoretically should be counter trading whatever comes out. So I'm kind of doing that approach here. But I'm also looking at the Eurodollar seasonality here. So I'm playing on quite a large speculation that actually, again, the Middle East situation isn't over and this is just a noisy headline. But I'm also looking at the way the way euro dollar moves historically. Now, I wonder if they fixed the euro dollar seasonality yet. Because I did try to show this yesterday. They haven't, unfortunately. That's okay, though. So again, you're going to have to kind of just take my word for it. Euro dollar is bearish from, I think, the end of August into the start of December, roughly kind of the end of the year period, Q3 into Q4. We do expect sort of bearish historical price action on euro dollar. But then I'm also looking at, excuse me, I'm also looking at the sort of behavior that we see within euro dollar as well, where we come up and create these lower highs. And every time we've done this, or the past 2 times, not a massive sample size, of course, but this is a weekly time frame. So I'm going to take it maybe a bit more seriously than the sample size might warrant, again, due to the time frame. But here, we create the lower high, we come down, we have a 15% move to the downside. Here, we create lower highs, we have a 20% move to the downside. Here, we've created lower highs. Are we going to have another, 10 to 20% move lower? Again, statistically, that does seem quite likely. So it's very, very speculative. But I am very happy to sit through it and see how it goes, because one positive thing about sitting through this trade is it's a negative swap trade. So buyers lose money, whereas sellers make money by holding the position. So even if this trade does just trail in drawdown for a little while, it's still fine, because again, I'm earning money for that whole duration. So it's definitely a risk I'm willing to take, and it's not a huge trade. It's 1% risk. It's very standard. However, what you were actually asking was euro dollar sort of shorter term. So if I wasn't in the short position, disregarding my approach to it, which is again a little bit more unique and a bit different to how I normally trade, I would be looking to be a buyer, because that's where the edge finder is telling me to go. The H4 trend here is bullish. So I would be quite happy actually just to look for some sort of pullback on the fib, whether it's back into these previous highs in the 50% retracement. So you can see here, the fib zone lines up pretty nicely here with previous resistance. So if broken, we could have a bit of a retest at this level again. But yeah, I'm not 100% sure, because I'll be honest, these technicals are a bit ugly. We've had a lot of quite impulsive moves to the upside, wicks to the downside. It's not super clear or clean, but yeah, you get the principle, hopefully. So shorter term, yes, I do think long positions are warranted. But yeah, longer term, I do quite sit under the more bearish side of euro dollar for now. Thoughts on pound Aussie? Interesting. Okay. Do we have pound Aussie on here? No, we don't. So let's pull it up. Gold pair analysis, please. Yeah, we can have a look at gold as well. Sanders going to 8,000. Is it? Okay, I'll take your word for it. A lot of gold requests. Yeah, we'll have a look at gold then after pound Aussie. Pound dollar. Okay. Do you all have FTMO offers? I don't think there is, but actually, if you scan the screen, there's a QR code there. Scan that, you'll find out what the offers are. There's also giveaways. There's all sorts of really cool stuff on there. So if you are looking for prop firm accounts, I think that is probably your best option. Just because, again, you get discounts. You also have a chance to get a giveaway, like a free account as well. So it's like a win-win situation. So yeah, a lot of requests for gold and pound dollar. So we'll definitely get to those. One opportunity. What's up, James? I'm good, my friend. How are you? Is fundamental heat map accessible to the public? I don't know, actually. I'm not sure. If you go to the A1 Trading website, I'm sure you will see some free resources there. There is a lot of things, but I'm not sure exactly what there is. James, fair enough for euro dollar, although I'd wait for a beats on NFP. Yes, NFP could absolutely be a bit of a spanner in the cogs, but we'll see. One of my other points this morning that I was saying to one of my Discord members was that, yes, NFP could be a big problem for the trade. It could just stop me out straight away. I'm fully aware of that. It's not a case of, oh, NFP is coming, I don't care. But the way I see it is, if you trade entirely around headlines, and it's a case of, news events and all headlines as well, you're just never going to get into a trade. So, oh, there's NFP tomorrow. Oh, but there could also be headlines over the weekend. Oh, and then next week we've got this and that. And you're just going to sit in complete paralysis. So I'd rather, it's trade. You've got to take risks. That's the job. Okay, I'll finish reading the chat, then we'll move on to get back to the charts. Hey, James, what's the expectation for NFP on gold? Price is already pushing upwards in anticipation. So we are expecting, where are we? So the forecast is 80K. Previous was 57K. So actually, if we do get the if we do get the 80K, which is obviously up from 57K on the last print, it wouldn't necessarily be a bullish catalyst because it's expected. It would be overall bullish because it is a good print relative to the previous one. But again, the initial reaction might not be that great, again, because it's priced in. That's kind of the consensus. So anything I would say above 85 to 90K would be quite a big bullish event for the dollar. We could expect some dollar buys, gold sells, euro dollar sells as well. Anything sort of below 75 to 70K, again, just the reverse. We'd expect some dollar short positions. So yeah, we'll see. Source, I'm good, thanks. How are you? Pound Swiss also broke its multi-day range. Yeah, we did look at Pound Swiss, but there's just not really anything there for me. Can I request to coin the chart? You can request a chart, my friend, if that's what you want to do. If you want me to look at something specific. So the way I normally do these streams for anyone that might be new, I bounce between doing chart analysis and fundamental analysis, having a chat with you guys, and then go back and forth. And that way it just breaks it up. And also I don't get mental fatigue from just talking about fundamentals for an hour straight. So we'll go to pound Aussie because this was the first requested one. Then we'll go to gold and then pound dollar. And then again, I'll go back to the chat after that. So pound Aussie, what are we looking at here? Let's just see what the reading is, or if there is a reading. It doesn't seem like there is. So again, automatically, my fundamental bias here is completely null. I don't have really anything to go off here on a fundamental side. However, technically speaking, it does look quite bearish, actually. So what we have through here is quite a nice weekly level. So we've got, previous lows over here, then tested as resistance. We've also used the weekly 200 moving average as resistance as well after breaking below. So to me, this looks like a very bearish type of technical setup. So based on just this weekly time frame, I would maybe be looking down here towards the, I don't know, let's say 1.74, give or take, that sort of zone. However, let's just take a bit of a deeper look here. The daily is also bearish here. We've got the 200 above the 50. We're seeing another rejection here around the 200 moving average. Again, quite a bearish little catalyst for us there. The H4 remains very flat. There really isn't much of a trend here. The moving averages are just side by side, a bit intertwined, no clear direction here. So yeah, I would say completely no trade, maybe a bit of a short bias on the weekly time frame, but as a shorter term swing trade idea, there's just nothing. There's no fundamentals. The H4 is completely flat. So yeah, there you go. Okay, we'll have a look at gold. And again, completely forgot to re-add my gold entries, but I'm long roughly around here and also around here. So I've got an entry around 4,000 and I've got another entry around 4,080, give or take. Again, they're around those levels. It's not super specific. So my theory behind doing that was the very, very small positions. And I was really looking to get in every $100 increment below 4,000 down to around 3,500 or 3,400, sorry. Expecting gold to continue lower on continued escalations in the Middle East, higher oil prices, higher inflation expectations, higher yields, and so on. So it was a very simple idea. I'm going to say unfortunately, but also kind of fortunately, we've not seen that. It's unfortunate because I'm stuck now in two very small positions that aren't great. I would have liked to have seen gold lower to trigger me into more positions, then go higher. But anyway, we'll move on. So what we have had on gold is a very, very smooth move to the upside. So as you can see, I've already got drawn on here. I am looking to be a buyer. And I think most of us are looking for basically the same thing, which is a fib from the low to the high, and then a pullback into around this 50% retracement that lines up with these previous highs. So that will give us the break, retest into the fib, and also, again, these previous highs for this continuation pattern to the upside. It's super straightforward. We've also got the H4 moving averages that have actually just crossed into a bullish trend as well. So if we zoom in here, you can see we've just had the 200 cross the 50. Not a huge deal, not a massive thing, but it does just indicate we've had a bit of a technical trend change here. Now, something else we were looking at yesterday was this 200 daily moving average, which again was being used as resistance. However, today we've managed to break above, which is a very, very bullish sign. So after having a daily cross here, death cross, whatever type of terminology people like to use, this is normally a big deal because, especially on something like gold, this is very rare. This doesn't happen on a weekly basis. The last time we had this type of cross, I think, was back in 2023. So that raised a big red flag for a lot of people, including myself. So now it's a case really of, was this just a short-term event driven by obviously the Middle East situation, Strait of Hormuz? And now if we do get de-escalations, can we just continue to run higher towards 5,000 first, then 6,000, 6,500, and so on? It's very possible. However, we can't get distracted because obviously whatever happens on gold next is going to be massively driven by the news today. So if we do get if we get NFP coming out, cool. Hold on, sorry, we just got a donation. I just want to read that. What does that say? Honest question: what is the infatuation with gold? And James, what's your favorite pet to trade? Okay, I'll get back to gold in a second. So to answer your question, by the way, thank you for the donation. That will go straight to the A1 Coffee Fund. So I think the infatuation with gold is because it's like a market that everyone's introduced to when they start trading. It's like if you trade futures, you trade, MGC or GC, so micro futures or just gold futures. Or if you're a CFD trader, you can just trade XAU USD. So I think it's a market that everyone can trade, whereas something like GBUSD normally leans pretty much just the CFD traders. Futures traders don't touch pound dollar, typically speaking, especially on the retail side. So I think that's kind of it. It's just a market everyone has access to. Also, the other side of it is the value movements of it are very large. So people with small accounts can make a lot of money with it. So it's like people just love gold. It's just one of those things. My favorite pair to trade is probably euro dollar. I love euro dollar, but I maybe cover that in a second. So back to gold. Excuse me. So yeah, if NFP comes out, cool, we could definitely expect gold to continue higher on a weaker dollar. So that is one thing. So we could see, if we do get a higher NFP print, we could actually see gold return back into the high of this range and then continue higher. It might be a bit of a catalyst to warrant a bit of a short-term pullback and then continuation. But we'll really have to see. Again, it depends on not just whether the print is good or bad, but also what the real sort of deviation of the print is. Is it a big beat, or is it just a small beat, or is it in line or miss, and so on? Okay, let me catch up with the chat real quick. Sitting on my hands, already had a good week. That is a very good plan. I think there really isn't a good reason to trade right before NFP, unless you're trying to have a bit of a gamble or you've got insider information. What pairs do I have on my watch list? This is my watch list. However, it's a little bit outdated now. So I make my watch list on Sunday and I'll filter them throughout the week. I don't really change the watch list unless I actually take a trade. But yeah, this was it on Sunday. So I've not removed anything since then. But yeah, every Sunday I completely scrap the whole watch list and I'll completely rebuild it over the weekend. And that's basically how I do it. It's just the simplest way for me. So am I buying it? Am I buying what? Sorry, I'm been flicking through different charts. I'm not sure which market you're asking about. James, do you recommend a GBP hedged ETF for gold or an unhedged ETF? That's a good question. I would say unhedged. And the reason I would go with that one is because I don't think there's a reason to have a full gold portfolio unless it's specifically for that and you've got other portfolios. So gold is typically used as a hedge on its own. So I don't think having a hedged gold. Oh, wait, hold on. Sorry. GP hedged ETF for, yeah, no, okay. So I don't think there's a reason to have a gold ETF that is hedged for you. So normally the way that these things are done is, you would have a portfolio made up of certain percentages, whatever your risk tolerance is. So let's say you might have 70% in risk assets. So that might be, the S&P or Microsoft or, a stock or a group of stocks, something like this. And then you might put another 30% of that, or the final 30%, into something like gold. And that would then be a little bit of a hedge for you. So if your stocks end up going down, gold can go up and just provide you a bit of a buffer there. Of course, this is completely, for example, not financial advice or anything. It's super simplified, but this is the basic flow. So no, I don't think going for a hedged gold ETF is really a great idea. But again, it really depends on your needs and wants. So for example, if you're, in your 60s, 70s, 80s, you might want to just invest in bonds. But for someone that's younger and wants more aggressive growth, you might want to go with more aggressive things like the S&P, or, hopefully you get what I'm saying, but that's my 2 cents. Again, not financial advice. I need to be super clear on that. Hey man, been targeting 4,160, but it doesn't look like it's coming down. Yeah, that's yeah, I think gold will come down. We will have a pullback, but it's just a case of when. We could end up going towards 4,500 before we have a pullback. Again, if we do get a really bad NFP print, that could absolutely happen. But even so, we will get a pullback. So don't worry. It's just, we've just got to be patient. It's just our job. James, Euro Yen. Okay. Yeah. So Euro as well. The yen pairs in general are super basic at the moment. So the only thing I can really do is reiterate what I've been talking about for the past 2 weeks. In fact, maybe even longer, is that I don't see a reason to not be buying yen pairs. And that, again, not financial advice, but in principle, nothing's changed. Yeah, we did have the intervention by the MOF and the Fed. What does that do? Well, nothing. Literally nothing has changed. So since Euro Yen was trending up here, since this point over here, nothing has changed. Literally nothing. Just we've got a cheaper price. So if you were willing to buy Euro Yen, Dollar Yen, Pound Yen, these yen pairs here, and we've got the carry trade, it's trending to the upside, great, everything's fantastic, we can be a buyer. There is no reason to have changed that idea right here, because again, we've got no policy change. The carry trade is still there. The BOJ hasn't hiked rates. So again, my default bias here is still to be buying yen pairs. So you can see I'm actually already in a position on dollar yen. I bought it right down here. So something I've been telling you or talking about with you earlier in the week, and actually last week as well, was the way that dollar yen reacts on interventions. So we get these interventions, and in fact, over the recent history, this has always rejected the 200 daily moving average. So I was buying as soon as we got to this 200 moving average. I was alert and watching. When we broke below, I was very, very confident this wouldn't work. So I was, I was buying that level. So that's what I'm trying to tell you, is that I just don't see any change. It's just a case of, dollar yen is a fantastic buy. Yen pairs are a fantastic buy. Still a great carry trade. Nothing's changed. Simple. But of course, things can change. We could get a very hawkish BOJ. We could get a very dovish Fed. The whole dynamic could change. I'm not saying this is forever, but as things stand right now, I do still lean towards the buying side. Hey man, do you think 4,160 will be tapped? Let's see. 4,160. Yeah, I would imagine so, because that's kind of where I'm looking at as well, within the same region. And again, based on very simple technical analysis, which is basically all I do, this would be a break and retest, which is typically how the markets like to move. Of course, not every time. It's not a rule, but typically speaking, this is kind of how the markets work and how they have their pullbacks. They typically like to pull back into a previous level, then continue. So yeah, excuse me. I would expect around 4,160 to be hit. It might not happen, absolutely could just not happen at all, but that is my base case at the moment. Gold or floor amazing, gold or floor amazing, no in between. Yeah, I would be inclined to agree with you on that one. It does seem to be the case. Tony, good to see you, my friend. Hope you're well. Which is the best time frame to use during high impact news? For what? I mean, just to watch it, like a 1 minute or 5 minute, that can be quite entertaining. But if you mean trading it, I wouldn't recommend doing that. Looking short dollar Swiss if NFP comes in weak. Yeah, Yeah, I think dollar Swiss is bearish on the edge finder as well. It could be, yeah, absolutely could be a good play actually, Tony. If we do get weaker NFP, could just solidify further dollar weakness. So let's go to dollar Swiss here. Oops. Yeah, in fact, actually, you know what, Tony? Now I'm looking at the chart, I like it even more because it's kind of what we've just been talking about, where the weekly timeframes on these Swiss pairs just don't do anything. You know, we have these pullbacks like we've had here, and then we just completely reject and continue to run lower. So yes, a negative, or not negative, but a worse NFP print could be a fantastic opportunity to get short and continue lower. Today's Aussie US dollar long fib projection looked so good, but not worth the gamble prior to NFP. Yeah, I do agree with that, Christoph. If NFP beats, we could get a pullback on NAS. Oh yes, Sluggy, that is a good point. I completely forgot to look at the US market. So I would love to get into the Dow. Whether we're going to get the pullback or not, I don't know. So I'd love to see, well, actually, fib from the low to, just realized my fib's misdrawn. Here we go. So fib from the low here to the high, some sort of pullback around, this level or this level, either one really is okay. But that would, again, provide that break, retest, continuation type pattern. So that's kind of all I can do when it comes to the Dow specifically. And we did have the Dow reading bullish. It seems to have dropped off, actually, unfortunately, but I would still be willing to be a buyer of the Nasdaq, the Dow, the S&P, because we've now broken out of this horrible period that we had where we just weren't really doing anything, slightly moving to the downside, but there was just no real direction. So now we've established a move to the upside. We just need to see a normalization. And what I mean by that is like just that obviously we've had this sort of expansion or the upside, whatever you want to call it, just some sort of pullback, then continuation. And that would just help solidify that we've got, upside price action to continue, at least for the time being. But yeah, as you said, a strong NFP print. Where's my drawing tool gone? Here. Strong NFP print could be, the catalyst for it to come back into this level and then maybe continue higher. Could be the same thing, kind of as gold. We might see NFP provide the move that we want to actually get into the position. But again, it's really down to what actually happens, what the data is. What's gold saying? My friend, we've covered gold quite a bit actually already. So feel free to rewind, but I might cover gold again later if we run out of things to talk about. Luna, no problem at all. That's what I'm here for. Rather Swiss for a clean move. Oh, wait. But then, James, why with this yen policy shocks, it's hard to get clean moves? What do you mean hard to get clean moves? Like dollar yen, I would say is very clean. I mean, the daily time frame, look at this. Perfect wick to the downside, just complete recovery. I'm not sure how much cleaner you would really want. If you're referring to this though on the H4, I would say it's a little bit of caution in the markets. There is still, of course, the risk that we could get another intervention, which is obviously a possibility. Anything's possible in theory. But the other side of that I've been talking about yesterday, I think it was, is they could intervene. But again, that doesn't change anything. It just gives traders and investors another better level to get in on. So, sorry, heard a bang. So if the MOF or the Fed decide to intervene again, it'd be just a case of, again, there's no policy change. Nothing's changed. We've just got a better price. I'd still be happy to be a buyer of it until we get something to really kick this market lower. Again, whether that's aggressive rate cuts by the Fed or aggressive rate hikes by the BOJ, there is nothing that I can see that would change this. And again, as I said earlier, that can change. So doesn't mean that dynamic would last forever. But as things are right now, I still view this as a brilliant buying opportunity. I'm in the same position on UJ, same long entry as me. Fantastic, Jeremy. Good stuff. Well, good catch. James, I see it possible as NFP beat and we got a pullback on US equities because mostly priced in. And secondly, a discount is warranted after that push. Yes, Sluggy, that is, I would agree with that. I think the World Cup may have been temporary, improve the US jobs. I don't know. I'm not sure really if the World Cup actually does have that much of an effect. It might do, but I would be skeptical on that. I'll be honest. I've never looked into it. I'll be honest. It could not. I'm really not sure. Where can I watch the NFP release? I'm new. My friend, there is no specific place other than this stream. So you can sit here. So actually what I'll do is I'll show you. Just give me a second here. Right here. So what we do on these streams is we cover the news live with you. So you will have TraderNick and Chris Pulver on for the NFP release. They will talk about it. They'll tell you what the news is. And I'm sure they'll show you what the release is as well. And they'll tell you the implications, what it means, so on and so on. So this actually is the best place. I know this probably sounds like I'm very biased, but you know, I wouldn't be on these streams if I didn't think that was the case. So there's that. And then, of course, you could just go and watch a news calendar and just see what the data is. Oops. And I would like to buy equities on a beat on the jobs market. Okay. But James, let's say if it misses big time, we still have gold longs to look for. Yeah, we can basically play either side, Sluggy. I would, yeah, completely agree with what you said. Nasdaq. Okay. Nasdaq here. So, yeah, the Nasdaq's a little bit of a trickier one here because we do kind of just remain in this sideways, what's this called? A sideways range that, you know, we don't really have a direction yet. However, after this move here, it is quite good. You know, a little bit of an upside move. At least we've got something here. But again, overall, there's still nothing here. So for me to get into a position, I would attempt one if we got a pullback into the previous fib level. Oh, sorry, the fib level. And that would just give us this previous level of structure on the left. It'd be a pretty decent area to look for a buy. Whether this gets hit or not is obviously a very different question. So on the idea that this doesn't get hit, option B is actually we break above, retest into this level, and then continue. So this retest of this level could also be a potential entry. So as I said earlier, I do stand on the long side. I'm still quite cautious on the US markets. You know, there was a time where I was talking a bit more about the AI side and valuations. That's still on my mind. But, you know, as I said, I'm not going to try and force that idea until I've got a real reason to, whether it's, you know, bearish edge finder readings, real daily trend change, something to actually warrant me really executing that idea. Until that happens, I'm just going to follow the typical system, which is breaks, retests, continuations, fib pullbacks, so on and so on. So yeah, I would be looking for a break of this resistance and some sort of retest into it and then continuation. That 50 to 618 fib looks beautiful on your NAS. It does look quite good, but again, it's really just a case of actually does it work out? You know, does this level get hit? Could it could not. So we'll just have to wait and see. Because cats outside, there's two cats, and they're just screaming at each other. We've got I'm not sure, again, I don't know if you guys are cat people, but we've got a Maine Coon that lives next door, and it's so loud and it's so aggressive. It's horrible. I mean, I love cats, but it's just that it's not a nice, it's not got a nice aura, you know, it's not a good soul cat. Anyway, so we've covered gold. We've not looked at pound dollar yet. So let's take a look there, because I have a little bit of an issue with pound dollar. It does look on the edge finder, it looks like a very simple buy, but the technicals are kind of telling a bit of a different story here. Kind of. So we do have a pretty decent bullish trend on the H4. You know, this looks okay. We've got a decent level to potentially buy from. Not great, but it'll be worth taking an attempt here. God, these cats are still going. Anyway, my point here is I don't like this, that we're continuously printing these lower highs. And not too long ago, we also printed another lower high here. And we attempted right here to come higher. And again, we could just completely failed. Sorry, guys. I just can't ignore those cats. Anyway, so yeah, I wouldn't want to be a buyer of pound dollar purely just based on technicals. I don't think it warrants me being involved. So if I was to be in pound dollar, or sorry, if I was to be in pound dollar, what I would need to see is something like this is what I had drawn previously, where we create some sort of new high, just break this bearish trend that we've been on, create a new high, and then pull back into the fib that would line up with the previous highs here, retest this trend line, and then a continuation higher. That's really all I've got for pound dollar, just because the technicals are just way too messy at the moment. Sluggy, you love cats? Very nice. I don't like cats. They're mean to me. It's probably because you're mean to them. Cats are much better judges of character than dogs. You know, so cats are not normally inherently nasty animals unless they've got a reason to be. Love the idea of GU longs. Yeah, again, I like the idea, but I just can't do it. I can't do it. No reason for me to be here at the moment. If we manage to break that downtrend, that'd be awesome. Yes, absolutely. I love cats. I have 6 of them. Fantastic. See, this is the thing. So we're all here. We've got a fundamental group, or a group of traders that trade fundamentals, like the intelligent traders. You know, we're not sat here looking at order blocks and FBGs. And we like cats. I don't think we could get a better community. It's like it's perfect. In my country, cats betray witchcraft. Brother, you live in the 1600s? That's some outdated shizzle. Any positions on the DAX? No, I don't have anything on the DAX, actually. I think I was looking for longs at one point. Oh, no, I'll tell you a lie. I was looking at FTSE longs, not DAX longs, sorry. However, I think there is a similar idea. Let's see. So the daily is bullish here on the moving averages, nothing spectacular. Let's see how this fib looks. So we could, yeah, I mean, actually, this does look quite good, to be fair. So we could be looking for something like this. So we fib from the low to the high, pull back into the fib zone, retest these previous highs, previous resistance as support, then some sort of continuation higher. Very simple break and retest into the fib, bullish trend. Again, super bread and butter setup. However, Edgefinder doesn't have a reading for the DAX, so that is a little bit of an issue. So we could then move on to the FTSE, which has, again, a very, very similar setup, but slightly nicer. So again, we've got the bullish trend on the daily. The 50% retracement level here lines up perfectly with the previous highs on the fib from the low to the high, of course, and then break, retest into the fib, into the highs, continuation. Again, bread and butter, super simple. Broader US weakness, James, anything goes. Yeah, we're really gonna have to see. There's something about the dollar at the moment. I just do not trust it. You know, I just don't quite see the weakness. That could come and bite me in the ass tomorrow, or even later today, actually, after NFP. I could really regret it. But I've just got that feeling that I can't commit to a dollar short idea right now. I think a real catalyst for that would be, again, some sort of dovish news from the Fed, a really big jobs miss, complete de-escalation in the Middle East, then I'll change my bias. But until we get something like one of those to happen, I'm going to stay on the sort of neutral to very, very, very cautiously bullish side. I once went to clean my friend's cat litter when he was traveling. I got attacked for cleaning. I mean, I'll be honest. If you think about that, though, from the cat's perspective, I think I'd attack someone as well. You know, if someone came into my house and went into my toilet and I didn't know who they were, it's like, why are you collecting my things like that, you weirdo? Guess I missed the gold analysis. Could you pull it up? Yeah, we can go over gold again in a couple of minutes. As I said, we have already covered gold, but I don't mind doing it again towards the end of the stream, just to recap. Hold on, what's going on here? Also in my country, but only the black cats. Yeah, that's some very outdated stuff. Cats are great creatures. As long as you look after them, they're good. Polymarket says NFP is not going over 60K. Yeah, I mean, that is a little bit of a concern, actually. Polymarket is a very good indicator. And to be fair, I think it's quite accurate as well. But we'll see. I mean, again, broad consensus, I think, is around 80K. Of course, it does vary on provider, but I'd say broadly it's around 80K. Okay, so Max says silver's up 4% ahead of NFP. That'll be an interesting move. I think it will be a big day breakout without any pullback. It very, very well could be. I don't want to commit to either side. I think it's a little bit of a risky move for me to sit here and say, I really do think NFP will do this. But I think generally speaking, it's just a case of, it's a Friday, the weekend's coming. There's no reason for us to sit here and trying to get into gold positions, longs or shorts, right before NFP. It's a bit of an irresponsible move. So we can sit here, we can speculate, we can come up with some cool ideas, and then when Nick and Chris come on, we can have a look and see what's going on. So yeah, as I said, my overall idea for gold is for a pullback to around, let's say 4,160, give or take, that sort of area. That would then bring price back into the fib zone of the 50% to 61.8%, lines up with the previous highs on the left. So that'd be a break and then look for this retest and continuation. We've just had the H4 moving averages here flip bullish. So I would say everything's lining up. The edge finder's bullish. The technicals look great. But again, I do think it's a little bit risky to overcommit to something like this right ahead of NFP. But then what we've also got to think about is the weekend is coming. And what do we expect on weekends? What are weekends now known for? Well, it's Trump mania, or headline mania, maybe I should say. So are we going to get a repeat of what happened last time? Where, gold was uncomfortably high. We get de-escalation headlines and re-escalations. Oil gets too high, and then another de-escalation. And at this point, again, relatively uncomfortable oil prices, and then it cools off. Then once oil starts coming back to its pre-war price, we get another escalation. And now oil's coming back down again. Are we just going to get another escalation on the weekend? It really wouldn't surprise me. Again, that is complete speculation. I've got no idea, but we'll see. All we can do is just observe. But yeah, that's the other thing. I wouldn't want to overcommit to many positions going into the weekend and, of course, NFP. So definitely a fun time we have in the markets. I've got to say, when all this is over, it will be very relaxing to just have quote unquote normal market periods, when our biggest issue is what central bank's doing. But these days, we've got to worry about how oil is flowing in Strait of Hormuz and Truth Social and all sorts of different stuff. So moving forwards, what do we have? Euro dollar, we've looked at pound Swiss, we've looked at the FTSE, pound CAD. Oh, I forgot to tell you, I did buy pound CAD yesterday. So I'm in this position, which is not going very well at the moment. Hold on, 4-hour time frame here. So yeah, I took this position, first of all, because it's bullish on the edge finder. Second of all, the technicals are okay. It's not looking great now. I did get a little bit of a late entry, unfortunately. The fib does line up with this H4 support over here. Nothing fantastic, but the idea is there. We did have the moving averages here that have sort of flipped bullish out of this little predicament we had over there. So yeah, overall, I do sit on the more bullish side. Again, edge finder does have bullish on pound CAD as well. So I do quite like it. However, we'll have to just wait and see because it is not looking overly interesting right now. So as I said, the entry was a little bit late. I should really have been in here, which was the retest of this previous structure on the left. That's typically, my entry criteria. So the entry, again, was 100% too late, but we'll see if it can, follow through over the next week or so. What else do we have going on? So pound CAD, we just looked at. Yen pairs are still looking quite good. So, we've got pound yen, CAD yen, Swiss yen as well. So again, that feeds into what I was talking about earlier regarding the yen pairs. It's not just a case of the it's not just a case of the carry trade dynamic is still there, but it's also a case the fundamentals actually are quite supportive. Of course, not on every yen pair, but again, on the ones I mentioned. I feel like it's going to be an escalation because there's a minor holiday in the US called Victory Day on Monday. And we all know Trump. Yeah, I mean, to be honest, it sounds ridiculous, but it wouldn't surprise me actually. Not going to happen. What's not going to happen? Trust me. Do you mean what Max said above you, or was it something I said? So oil prices may go up. Yeah. Well, again, it's very difficult for us to sit here and say, but the way I'm taking it is again based on what we've got as essentially just data. So if we take it from an analytical view, what have we had for this whole duration? What has been the best way to trade it? Well, on the escalations, if you actually short, of course, this is if you got it perfect. Of course, if you sold straight away, probably not. But in theory, again, if you sold the escalations and bought the de-escalations, you actually would have made a lot of money in this period here. And then again, here on the de-escalation, you would have made a lot of money. If you were counter trading the headlines. So maybe this is, again, the sort of analytical approach is actually we could or should maybe be expecting escalations again. But as I said earlier, that will come to an end at some point. So it's definitely not something to actually trade off specifically, but it is something I like to think about. Simo, hello, good to see you, my friend. DAX is flying, currently long. Very nice, Gareth, good catch. We did look at the DAX actually slightly earlier. Here. Yeah, so this is my plan on DAX. If we can see a retest into these previous highs, I would 100% love to be long. But again, it's just a case of waiting for the pullback, but also we don't have an edge finder reading for the DAX. So it puts me in a bit of a position where I really like the technicals, but fundamentally just doesn't really have anything. Oil's in a triangular pattern. Is it? Oh yeah, I suppose it is actually. I don't really look at sort of patterns and things, but yeah, I suppose you've got this kind of thing here, don't you? Yeah, like that. Yeah, good spot. Buy or sell, brother. Buy or sell what? You're in the wrong place if you're here to ask buy or sell. I'll be completely upfront with you. This isn't a stream where you come to get some free trading signals. So yeah, maybe go somewhere else. I bought the gap fill on oil or what? I would assume you meant oil. So you bought the gap fill. So where would that be? I'm not sure where you'll be referring to there, Mega Danger. So gap fill, do you mean down here? So you bought it here? To be fair, that was a good idea, actually. Maybe if you did do that, I quite like it. You closed DCA on GC? You closed DCA on GC? No, I've not. I'm still in the gold position, Simo. Mega Danger, very nice. Well, congratulations. I guess you are I guess you're hoping for escalations. As horrible as that is to say. I'm a Heineken Ashi trader. Oh, Heineken Ashi trader. Okay. I thought for a second there, Gareth, I thought you were talking about the beer, and I thought you meant you were trading the like Heineken stock. So I was a bit confused. But okay, Heineken Ashi trader, very nice. You bought it 68. Fantastic, Mega. Yeah. I mean, mega trade. Well done. That was a bit corny, wasn't it? But yeah, good catch. Okay. So Nikkei is still getting a bearish reading, which is interesting. So I think, as we spoke about yesterday, the Nikkei is in a little bit of what I would consider a trap, not like liquidity sweep trap, not that type of thing. I don't mean that. I mean more of just a general basic type of trap. It's, we've got a bearish reading on the edge finder. I know a lot of us were short. I was short. I think Nick took a short as well. And I think a few of you in the chat were short on the Nikkei because we all trade very similar strategies. So it was natural. However, obviously, that hasn't played out. We've had a very aggressive move to the upside. The H4 now is looking not bullish, but it looks like it could could turn bullish pretty quickly if we end up printing new highs. Moving averages end up crossing over. Yeah, it could be a fantastic move to the upside. So I would actually more lean towards being a buyer on the Nikkei. And another reason for that is because what we have been looking at here was sort of just this idea that we had more of a mean reversion pullback rather than a real beginning of a downtrend. So if you look over here on the left, price got quite deviated from its 200. We had a bit, mean reversion or pullback on the daily, but on the H4 and the H1, the lower time frames, it did look like a change of trend. It looked like a good area to sell. I think that's kind of the trap some of us got caught in here, which is warranted. Again, the fundamentals were bearish on the edge finder. The technicals aligned. It's not a problem. I don't say it was a bad decision, but again, probably not the right decision, if that makes sense. So yeah, here we got deviated from the 200 again, and we've had the same thing happen that we saw over here. So we just had a little bit of a pullback on this daily, while the H4 and the H1 looked pretty bearish. So now it's a case really of actually this could be quite a good buying opportunity to just benefit from this daily trend to continue higher. Excuse me. So I don't really see a way in just yet. I don't see any technical setup. So again, I think what I would need to see here is a completely new high get formed, then a higher low, and then I would look to get in on this higher low for a continuation higher. We know strong wine is the way forwards on Friday. I've not had wine in quite a while, actually. I should have bought some. I was at the shop this morning. I found a wine that I really like. It's really cheap as well. It was like, I think £8, £8.50. But yeah, it's just delicious. It's really good. I'm not a huge wine person. I'm not one of those people that cares about like the age or location or anything. It tastes nice. I'll have it. I'm not too bothered. But yeah, I'm gonna have to go and get some now. You put ideas in my head. Look at you, Gareth. You're a bad influence. XAU buy or sell in NFP. I'll tell you what, dead spray. If you go onto MetaTrader and you put 99.9 lots and buy, it'll probably work out, I would assume. Of course, I'm joking. Please don't do that. I'm messing with you. So as I said to the other person that asked earlier, this isn't a stream where you come to ask for trading signals. This is more of a stream that for people that want to learn or just discuss fundamentals and setups and things. We don't endorse, giving illegal financial advice on a YouTube stream. I just joined 5 minutes ago. Have you looked at the Dow? We did actually, Mega. Yeah, I've got 5 minutes left. So, well, 4 minutes left. So we can have another quick look. So what I'm looking at here on the Dow is for a break and retest type of pattern. So obviously we've got the fib from the low here into the high. So pull back either into the previous high here or, over here. Either way, it doesn't really matter. It lines up enough really with the fib, the 50% or the 61.8%. Either one is okay. And then for, the continuation type pattern, break and retest, very simple. Also, we've got the overall bullish trend. The downside, though, is that the edge finder doesn't have any reading for the Dow. There's no bullish reading, no bearish reading. We're kind of just sat flat. So, yeah, not a huge driver for us there. Widen a brown paper bag. I stopped doing that a couple of years ago. Although, next time it hits a losing streak, maybe that will be the play. Make myself feel better. Dow hitting top of a huge parallel. Is it? Yeah, I suppose actually, yeah, I'm sure if you connected all of these highs, you probably would get quite a nice parallel there. Yeah, I don't trade that, but it might be a little bit of a caution, but we'll see. I'm not really knowledgeable on a lot compared to my counterparts here, but I really don't understand gaps in charts and how it is allowed if the market was closed. So I've got 2 minutes left. How can I explain this in 2 minutes? So what we see in the markets when we get a gap. So let's say the market is doing this, and this is now the close. This is the Friday close on the market. And then let's say in between this period here, which is the weekend, let's say, we get some crazy news that should drive this market higher. So escalations, de-escalations, whatever, it doesn't matter. What we will see is, bearing in mind, this isn't just retail. It's not just a case of we have to wait for the market open to click buy on MetaTrader. People can place orders over the weekend. It doesn't mean they're going into the market on the weekend, but they can place orders for the market open. So, there we go. So when the market opens, we can see a massive inflow of orders and entries and positions. So it's not a smooth continuation of price, but it's actually just a jump in price. So it's not a case of it's not allowed. It's more just, it's just one of those, so many orders come in at one point and so much volume comes in at one time, the market just gaps up or gaps down. So at these points, this is where we typically do expect corrections into, because then there's very likely resting orders inside the gap that haven't been filled, and we need to correct back into the gap and fill it. That was a super, super basic explanation, but I'm sure Alan might be able to explain that in a bit more detail. Again, I'm running out of time here, but that's the basic premise behind the gap. What is your analysis? Do you mean my strategy, or do you mean analysis on a specific market? Go back to COVID, I went short. Fantastic, Mega. Sounds like you're catching some good plays. I like the way you seem to approach the market. It seems quite interesting, much like a higher time frame, sort of extreme mean reversion type approach, it seems, which I quite like. Thank you. Makes a lot of sense. Yeah, no problem. Again, that wasn't quite the best explanation, I don't think, but again, it should give you the basic idea. Great question, whoever asked that. Yeah. Also, by the way, that wasn't a stupid question. You framed that like that was a bad question. That was quite a good question actually. So don't put yourself down like that. Yeah, high time frame for big moves. Very good, Danger. Love it. Okay, so 10 seconds left. So I'm going to hand over now to Alan Perez, who is coming to take over the show. Don't go anywhere. Again, we do have another guest coming to take over. Alan's a fantastic guy, fantastic trader. So you're in great hands with him. Guys, enjoy your weekends. And please do not margin call yourselves on NFP. Yeah, just not worth it. Stay safe. Don't get margin called. Guys, see you later. Here's my favorite rapper. Source, leave me alone. It's the weekend. Guys, I'll see you all next week. Enjoy your weekends. See you later. Bye.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is 8cap. 8cap is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in the live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. 8cap has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out 8cap if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style as well as your own risk tolerances. Thanks to 8cap for sponsoring today's content. Now back to the show.
Good morning, everyone. Happy NFP Friday. This is the day we've been waiting for all week. Okay, we've had a pretty slow, underwhelming week, I would say. Okay, we had the week started and we were supposed to have a deal come Tuesday or Wednesday about the Trader Hormuz stuff. That didn't happen. Bank of Japan took a chill week, I would say, this week as well. So no interventions or anything like that. Everything was waiting on this monster NFP report that we are about to get. So I am happy to be trading it alongside with you all. Hope you guys are doing well. And like James said earlier, I hope you guys are full margin today because this is the day to do it if you were to do it. Jokes aside, just kidding. Trade responsibly, okay? Lots of volatility I would expect today. I'll go ahead and break it down for everyone here that's curious, that's watching, but happy Friday to you all of the regulars. Hello, Simo, Jeremy, how are you? All of you guys. Hello, Tiger. It is NFP. Yes, it is with the P right there. Yeah, we'll see. Hey, Sluggy, good morning. Max, good morning, man. Simo, Migs, Tony. I'm just going down the line here, guys. You guys are W Financial Advice. There you go. W Financial Advice, guys. No, it is not financial advice. Let's go ahead and get started here. So I see a first comment here initially, but from Ken. What gold is doing right now before NFP, this pattern shows that NFP will be a huge beat. If the market thought the USD will sell off on NFP, you would see gold going down before the news for positioning. Well, maybe the market knows something we don't know. It is up 2% today, which is pretty good for my trade here. So what I'm going to do actually, so for all the gold traders out there, right? I'm long gold. I like the idea of being long gold. I'm going to actually trail my stops here a little bit. So I'm going to trail it past this structure right around here. I'm going to give it some room for it to potentially wick me out here. So I have this level here. So I'm going to just zoom out here for a sec. And I'm going to show you kind of the levels that I'm watching on gold and how I'm going to trail this profit right here. So this is a level of support here. Potentially, we broke above that. The big level, though, was around this 4,200 level here. So you had this level right here, resistance right here. We blew right past that. We actually had a pullback of some sorts yesterday. So maybe this level actually does hold. And so I'm going to trail my stops right below this level here. So if price does find its way back here, I would imagine that there is a case for buyers to go ahead and step in and defend this level. And again, this is just simply just trailing stops below structure, right? So the ideal case is that NFP comes in softer than expected for this trade, and it just continues to grind higher. That's kind of the ideal scenario. But in the events that you do see some volatility, and we all know that NFP comes with lots of volatility, right? Lots of whipsaws. I was talking to Tiger yesterday on a call, and he was basically saying, like, it's very normal for you to get like bunch of just this going on and then a one directional push in either direction. So I want to make sure that I'm able to absorb and survive this right here, right? The big wicks. So I'm going to trail my stop below the structure here. It gives me enough room to absorb any volatility and let this thing play out. But nonetheless, this is now a risk-free trade. I'm just securing some profits here. And that's what it is. For my euro dollar position, same thing. The structure here that I can trail, my entry point is very, very close to the price where it's at right now. So in fact, the way I'm kind of managing this one is I just have my stops at break even, right? So I can't gain anything, but I can't lose anything either, and I'm pretty happy with that. So gold right now is kind of pulling the weight here for now. But yeah, it's super big day. Let me ask you guys this, okay? As we're getting closer to the day, to the minutes, we are about 25 minutes out from it. What are your guys' thoughts? Weak NFP, strong NFP, just go ahead and type that into the chat. And I would also like to know why you think that. And why you do that, let me just address these other guys. Luna, hello. Hey, Leah. Hey, Major Capital. How you doing? I'm going to do trade on gold full margin. Jeremy, be careful right there, man. Let's be careful. Hey, bro, I'm risking all my money on the news. Just kidding. Don't do it. Don't do it. It is not worth it. You are supposed to live to fight another day. Max says, I would take out half of that size position and let the rest run. Good luck. You know what? I'm feeling good today. I'm going to leave it on, man. It is what it is. Look, this really wouldn't impact me much. I'm going to just let this thing play out here a little bit. So stops below structure. Pretty cool with that. Why did I enter gold? That's a great question. So let's go to this chart here where I have my analysis on gold. The reason why I entered gold was a variety of things, right? So first, let's understand what's moving gold and why it's doing what it's doing, right? So when gold became so popular, right? This was end of 2025 going into 2026. This was like the gold run up here, right? This was like the euphoria. Everyone was talking about gold. If you're not in gold, you're an idiot, right? This is what that is. So this right here, this big push upward in gold was due to lower inflation, right? A weakening jobs market. You had the Fed looking to cut interest rates. And so that right there was fuel for gold to rise up. And then right around here, this exact candle, literally this exact candle right here, was when the war in the Middle East started. And if everyone reflects on your social media algorithm, the day or the weekend where the war started, everyone said, buy gold, buy gold, buy gold. It's the easiest trade in the world. Buy gold on the Sunday open. We're all going to make a killing. And the complete opposite was true. Gold, right, a safe haven in times of distress, in times of uncertainty, usually thrives. This time, gold did the complete opposite and traded to the downside. Well, the reason is because of oil. So the conflict in the Middle East, right, disrupted the oil trade, the oil supply in that region, 20 to 25% of the world's oil supply. And so that caused oil to go ahead and rise up. And so what that means is if oil is rising up, inflation across the world goes up. And so essentially the money printer story, the thing that gold was thriving on, was essentially disrupted, because if inflation goes higher, the Fed no longer cuts interest rates. In fact, they go the entire opposite way and they start hiking the interest rates. And so that right there went ahead and just disrupted the gold trade. And that's why in a time of war, a safe haven like gold was trending to the downside, right? So oil does not like inflation. Gold does not like inflation. Gold does not like higher interest rates. Gold does not like restrictive monetary policy. So the question you asked was, why did I enter gold? What changed for me? Well, a couple things. So this right here, you have a strong kind of downward trend here on the price of gold, right? You had a breakout right here, and we've been staying above that level. So to me, technically speaking, that is bullish. Also, too, if you just kind of zoom out of this chart here and you look at the price of gold, I entered somewhere here. If you look at the price of gold and you just assume that we are near a bottom, you are getting at a relative cheap price compared to relative price action, right? So you're getting here and the max was right here. So I am very, very cheap right here relative to what's been going on. So I like that as well. Now, from the fundamental side of things, you've been seeing something very different, right? So with the dollar, same thing, right? You're seeing the war start, right? We need to understand the dynamic of the dollar too and how it plays into this. Gold, you can basically some view gold as like against the dollar, right? So like if you have a dollar up day, likely you have a gold down day, and if you have a gold down day, you have likely a dollar up day, right? So while gold was trending lower, the dollar was trending higher. So the war started right over here. And since then, it's been trading upward, upward, upward because, of course, inflation fears are coming into the picture, the possibility of the Federal Reserve to hike interest rates, right? So that causes the dollar to move upwards. Well, as you get here to this level of resistance at 102, you were starting to see the dollar momentum kind of fade off there. So automatically, I'm like, okay, if the dollar starts to unwind, how can I trade that? One of them being gold, right? Also, too, you have further economic data supporting a dollar unwind, right? We had lower oil prices in June, and so that meant that we saw lower inflation prints. PI and PPI came in cooler than expected, and then also PCE came in flat, right? So that was like kind of adding to that potential gold bullish dollar soft narrative there. Also, too, on the labor market side of things, you had NFP report last time come in weaker than expected, and so that was bad for the dollar, bullish for gold, right? So that was what kind of fueled that trade. So it was a mix of like technicals, fundamentals, and then I can also show you this here as well, right? To confirm that, let's actually go to the asset scorecard on gold, just so you guys know that I'm not pulling nothing under my seat here. If you go to gold, you can see here that the score, let's do this, right? This is how effective the tool is. So this gold right now is getting a very bullish reading. You can see here that for a while it was getting a bearish reading, and then up until recently, as you're getting the technicals improving, the sentiment improving a little bit, the fundamentals underneath the trade improving a little bit, you can see that the score for gold went from bad here in the red to starting to improve. And so there's a really good mix of technicals, fundamentals, a little bit of sentiment, a little bit of understanding kind of the drivers about this market that we're in right now. And so that is why I decided to go long gold. So I hope I answered your question. I know it was a very long kind of explanation there, but I hope it landed because I know a lot of people are watching right now. We have a couple hundred viewers now, so I wanted to make sure that you guys kind of understand kind of what was driving gold, what was driving it in 2025 going into 26, why it was disrupted, and why I'm making the decision that I made just now. So yeah, hope that answered your question there, my friend. Let me go ahead and read the chat because we did get quite a few comments here as I was doing that. So let's see, let's go down the list here. So I asked the question, what do you guys think about what the NFP could be and why? It could go either way, Sluggy. So that's a great answer. I'm in the same boat as well, right? I don't know for certain what's going to happen. So for me to make that call is unrealistic. Roshan here wants a weaker NFP, dollar bear. That's the way I'm positioned. So that's kind of what I'm looking for as well. MGS says probably neutral NFP with a main focus being on unemployment. That's a great catch there. Let's see. Roop says strong NFP. Andrea says pound dollar buy. NFP might come out bigger, some say because of the World Cup. That is actually true. So Canada did see a bump up in a lot of part-time jobs, temporary part-time jobs due to the World Cup. So maybe you see the same thing happening in the US. So the US has a bigger economy and their services economy is already pretty big. It's the majority. So I would think that they didn't have to do too much hiring, excess of what would be out of the ordinary to kind of support the World Cup. But I don't know, right? I don't know. So that could be something that we could look out for as well, as far as like part-time employment numbers. Modi's over here saying soft NFP, strong NFP. So it's a pretty good mix of soft and strong NFP. So we'll see what happens again. It's our job to be prepared. So if you were to get, let's just keep it simple here. If you were to see a really strong NFP report today, that probably adds rate hike bets back on the table, and so you likely see a strong dollar and gold softening a little bit. If you were to see a really weak NFP or a big miss to the downside, likely that is scaling back some of those rate hike bets, because then the Fed has to kind of ask the question, do they prioritize labor market and do they prioritize inflation? And given that oil prices, as of speaking today, down 1.5% is pretty low relative to where we've been at before. And we saw a previous round of inflation numbers coming in cooler than expected, then potentially they could make the assumption like, okay, oil prices are lower, inflation's kind of taking care of itself. Maybe we could go ahead and position and kind of put our focus on the labor market. That could be the case. So we'll see. We'll definitely see. Is it a bad idea to enter after the news? Well, I'll say this, Zevis. It is definitely a bad idea to enter before the news. And I think that a lot of the smart money out there enters after the news. So if I were to make any trading decisions, it would be after I have the complete context and all the data. Nick, good morning, man. How you doing?
What's up, Alan? I'm good. How are you doing, man?
Pretty good.
Thoughts on NFP? What are we full porting today?
Well, one of my kidneys is already gone, and I've already wired it into the trading account. So I am full ported long side on a weak NFP report.
Okay, easy.
Pretty easy, yeah.
Great. Totally kidding. For the brand new trader who just waltzed into the stream, we are not serious, but we might get serious at some point. You never know. It depends how bad the drawdowns get. You know what I mean? Alan, I'm jealous of your gold trade. You're sitting in a wonderful gold move here. I'm not in the trade. I'm happy to see it run. I would love to see it keep going. If I miss the trade, it is what it is. To be honest, it's weird. As a content creator, you get this kind of like dual-sided thing where it's like, okay, I have been leaning bullish on gold. I am not in a trade, but like, let's go. You know, it's awesome that it's making the move, even if I'm not in it. So that being said, if it pulls back, I'm interested. If it doesn't, then it is what it is. Okay, Alan, I've got to figure out my voice levels here. Give me a second. Yeah, no worries. And you know what? To add to that, I felt the same way, Nick, about your gold trade earlier. So it washes out. It is all good and dandy. But I'm definitely watching to see what happens. Yesterday, for the chat and for Nick, I did see somewhat of a pullback. Now, I don't know if that was it, right? We had this level here that I have marked up about 4,200, which was a breakout level I was watching. Yesterday, we actually didn't tap into it, but we got pretty close to it. So I'm curious to see if that was the pullback or not. But again, the volatility today will definitely go ahead and either confirm the trade or take me out of it. And if it takes me out of it, then the question becomes, well, is it still probable? Does it still make sense to go ahead and enter again to the long side on any continued downside? Yeah, no, it'll be interesting. Alan, is the mic on? Can you hear me okay? I can hear you. I can hear you okay. Here, let me do this here. I think I can adjust your audio. Try now. You turning mine up. Okay. I'm curious. Like, I can turn it up. It's weird. StreamYard all of a sudden started giving me this issue. Like, it's probably louder now. Like, you can probably hear me better. But still, I'm at like max volume on here, and it's weird. Like, my mic just doesn't want to cooperate right now. Here's what I'll do. So for me, I can hear you just fine because you're the only audio source. But as the viewer, you're kind of comparing my level versus your level. So let me bring mine down a little bit. Hopefully, it kind of evens it out. And then for the viewers out there, if you guys want to kind of bump it up, we can collectively be at the same level, and then that should help it just a little bit. So can I even adjust my volume? If you can't, then there's a setting on audio, adjust mic volume, automatically adjust mic volume. If you turn that off, you can manually adjust your mic. I had to do that.
Let's see.
Okay, people are saying it's good now. Thank you guys.
Should be
That's
good? Okay.
guys, that's why we have Alan here. Alan just makes things flow, okay? So, with that said, I don't know. I think the NFP report today is expected to be lighter than the previous one. I want to say I saw like a 60,000 jobs forecast. No, okay, so 85,000 jobs forecasted for today. I got that mixed up. Last time around, we had 57,000 jobs added to the U.S. economy. So for the month of July, there is expected to be an uptick in hiring. This is still kind of a very modest number, 85,000. If you remember, going back a few years ago, post-COVID, you were seeing some wild numbers like 250, 300, 350 added in a single month. It's been for quite a while a slow hire, slow fire type of environment, or low hire, low fire environment. That being said, average hourly earnings, I like to take a look at this stuff from if I go labor market data, wage growth, like I actually think this stuff is a little underestimated in the sense that like here's wage growth, right? So wage growth's around 3.5%. Inflation just ticked above that for the first time in a while. That means something to people, because first of all, the CPI number, like 3.5%, I don't know about most people in the audience, but I feel like when you go to the store, it's not 3.5% for a lot of goods and services, right? A lot of things have gone up 25%, right? 20% in the last year and a half, 2 years. So that being said, with wage growth kind of slowly diminishing here in terms of a year over year gain, and then you compare that to CPI, which I want to say is at 3.5% right now. So it's matching it. So the point is, for a while, we had much lower inflation and higher wage growth relative to that. So that was helpful to the consumer. The reason I think that matters is that I think that if you have that dynamic for a period of time, it starts to weigh on the consumer. We could start to see that materialize in weaker GDP growth, retail sales numbers, et cetera. So yeah, it's an interesting one to keep an eye on today is wage growth in addition to the actual jobs added.
Yeah, I love that. And I was gonna ask you what kind of a beat in, and if like, so the thesis here, the way I'm kind of, my bias is leaning gold to the long side, giving what we have right now to look at. But obviously, if you were to get a strong NFP report, that could disrupt that narrative. How far of a beat do you need to see for you to scratch the trade entirely and just kind of put it back on the back burner?
So, okay, so you're like, how strong of a jobs number are we looking at today that would stunt the bullishness on gold? Is what you're thinking? Yeah. So if I've got this cool little handy chart on the NFP chart within Edgefinder, it shows the magnitude of the beat or miss. So it takes the actual number minus forecast in thousands. So we've been looking at the last couple times getting pretty meaningful beats. The last one was a miss. I think that if you are looking at something where it is, a blowing out over 100K beat, then yeah, that puts a little bit of a pause on the jobs data that we've been seeing, because we've been talking about it all week, Alan, this idea of like most of our jobs metrics recently have been coming in soft. So JOLTS this week was soft. ADP was soft. Weekly jobless claims was pretty much in line with expectations, but maybe just modestly better than expected. So I feel like if you're looking at this today, watch these two numbers. If both of those things, I would say it's not just about the jobs number. I would say it's about the unemployment rate. If unemployment rate today ticks lower or stays lower than what forecasts are, and simultaneously the number of jobs added is meaningfully higher than forecast, let's call it 75K plus more than expected, then that would really challenge my gold bullish thesis. But in most other scenarios, I'm still probably bullish gold.
Cool. I'm kind of in the same camp to it, unless it's like a meaningful, humongous kind of derailed from what expectation is right now, then that would really challenge it. But also too, one thing when I really like this chart means a lot to me right now is the price of oil just continuing lower. We haven't had anything confirming. We were supposed to get something either Tuesday or Wednesday. Nothing happened there. But this here is helping that kind of outlook as well. So I like this. Do you have a range, Nick, that's problematic? I'm saying like if we creep back above 88, problematic as far as things staying hot over there, not calming down at all. But I'm kind of liking just hanging out here at that 200-day moving average. I think that if you stay there, that could continue to translate into subdued inflation prints, tamed inflation prints that could cause the Fed to go from either super hawkish to 2.5 to 2 rate hikes to maybe just staying neutral. Are you in agreement with that? Or are you looking at something different?
Yeah, I think so. I think that 200-day moving average is a big player. So if you lose that to the downside, that's an optimistic thing for inflation concerns, probably softening up on the dollar, bullish gold. And I would argue also, yes, the nominal 88 level, I see exactly where you're at with that. It's that ping pong level, the bottom into that range where your past resistance level is sitting. The other half of that is that downward trend line you've got. I've got the exact same chart lined up as you, and that downward trend line, if that were to rip and explode higher, I'm flip flopping. You know, I'm switching to okay, that's actually inflationary again, and people have, you know, we've talked about this a lot. There's been a lot of back and forth in the last 60 to 90 days with what's gone on in the Middle East and some uncertainty around it. And so you have a situation where I think it's actually better to be adaptable. People are also, we discussed this last time we were on together, people are able to kind of get confirmation of the bias that they already have depending on what social medias they're following. So what I mean by that is that if you think, the conflict is never going to end and it's going to worsen again, and you think oil is going to skyrocket, well, take your pick. There's plenty of social medias that would tell you that, that things are not working out, that Iran will never back down. But then at the same time, if you're looking at other sources, they'll say, hey, we're closer and closer to a deal, and here's oil prices falling. So we talked about this last time around. I think the most important indicator of what is likely to come out of the Middle East in terms of news is the oil chart. In terms of like headlines, like scary or good news headlines, I can almost guarantee you that what's going to happen is you'll see a big move in oil, and 1 hour later, you'll get the headline of why that happened.
Yeah. Yeah. It's definitely like so tricky to navigate too. I love those scenarios. And Nick, I wanted to ask you, one of your also favorite things to trade aside from gold you voiced is the Nasdaq, where it's been like relatively weaker than the S&P 500. So where you have the S&P 500 getting at all-time highs, you have the Nasdaq here trying to make a break higher. I have like this downward trend line on my chart, Nick, right here, where it was just capping some advances here. And then recently you had the breakout retest of that trend line, and now you're kind of shooting higher there. Is that something that's on your radar? I know me personally, I'm not super savvy in the stock market world. I kind of just look at US macro kind of holistically. But like this right here, right? Is this something that, you didn't get a meaningful pullback to the downside, and so you still want to wait for that? Or are you going to, or actively looking to participate even in a slower grind, higher type environment on the NASDAQ?
So that's a great question, because I think like if you're looking at NASDAQ, it has been the relative laggard compared to the others. There's been a lot of squabbles and uncertainties in the tech world, a lot of AI, CapEx spending. It's never going to end. People wanting return on investments. I generally remain bullish on tech. The thing is, for me personally, it depends I have two kind of sides of my activity in markets. I have like short-term trading, and then I have like longer-term thinking, buying the dip. Do I want to be investing in tech stocks right now? The answer is no, not really. Like, I think the risk reward here, you mentioned that 200-day moving average. If we were to have seen that come, we're getting closer to the point where I was like, okay, I'll take some long, kind of buy and hold good stocks that I like for the longer term. I was watching the semiconductors ETF as we continue to pull back. I was like, maybe it's worth the risk reward. So that kind of ship has sailed for now in terms of like passive investing. But as a momentum trader, shorter term, we still look really solid here. Like you pointed out, breaking to the upside here on Nasdaq. The challenge that I have with it, the reason I don't love it is fundamentally we're kind of mixed on the score here. The other thing is that crowd sentiment just went like super, like, I don't know if you heard this, but we hit like record put call ratio data for like the last year and a half or something on the Nasdaq. Like there was just massive call volume. So I think in the short term, you have a little bit of room for this to pull back. Also, I'm just going to switch over here so that we can watch the NFP report release. That is coming in 20 seconds here, guys. On the screen, I've got a bunch of charts for you. These are 1-hour candles. Got S&P, NASDAQ, gold, silver, oil, and we've got about 10 seconds here to go before that number releases. We'll have it pulled up for you guys to see the reaction everywhere. Let's see what we get.
Drum roll, drum roll.
Yep.
4.1 unemployment.
Okay.
Non-farm in the negative.
Wow. Dollar is diving right now, guys. Minus 23K, guys. Wow. And
Yeah, there it is.
So the mixed, the right away though, mixed.
The unemployment rate, yeah.
Yeah, that kind of like mixes things around. So before you just only look at the headline number, also recognize 4.1% is lower than expected. That is a soft jobs print though. And again, what they'll say, people will point out, oh, this is low participation rate. That's why the 4.1, that's what people will say. So, wow, softer than expected on the employment change by a large margin, Alan.
So at that point, which one do you pay attention to? Do they wash out? Like for the viewers and for my sake too, like do they wash out? Does one overvalue the other? Like the unemployment rate was a marginal change versus the NFP report was a huge divergence in the expectations. I kind of say like the NFP report would probably drive the market moving forward for a little bit, the price action today. But is there kind of one that you overvalue over the other, or are you kind of in the same camp?
I'm going to make a prediction really quick, Alan. The dollar yen is not going to like this. So I think the headline, the jobs change, is the more important of the two. I'm just getting flashes of, I'm getting flashes right now of August 2024 for my market historian friends who've been around for a little while.
That was a terrible time for me, Nick.
Yes.
I was on vacation, neglecting what was going on. Come back August, I'm like seeing dips and I'm buying them, and it just continues on lower. That August 5th.
Yeah, no, I think, okay, so let me break this down here a little bit because this is kind of interesting. So August 5th, I think that's what you said. Yeah, like there was, what happened on a Friday, we had a non-farm payroll on a Friday. It was way worse than expected. The Bank of Japan was doing the same thing that it's doing right now, trying to defend the yen, trying to strengthen the yen. Then what happened? Jobs number comes out super weak. Dollar plummets lower like it's doing right now. It sold all day long. And then on the Sunday night open, Pulver and I, who's about to be on the show in a second, we watched in awe after, basically it was a BOJ freak out where it was like massive yen strength, massive dollar selling, stocks flooded lower, tech stocks got, hammered. I wouldn't be surprised, to be completely honest, if there is a little bit of that jitter come in, and I think you can see it in gold right now because gold is ripping. However, full context of that event, everything sold in the second half of the day. So yeah, gold ripped, then fell. So we are coming into major resistance here on gold. We'll keep an eye on it. Alan, I know we got Chris jumping in here, so I'm gonna kick you out of here, but I want to thank you for the time, the conversation. Wonderful as always. And man, we'll see you on the next one.
All right, man. Take it easy, man. Appreciate it. Stay safe out there, everyone. Bye-bye.
Thanks, guys. And thanks, Alan. Okay, guys, I'm going to play a quick clip here, and then we're going to bring in Chris Pulver to the conversation. Stay tuned. Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what PropShop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks, so this creates a unique opportunity for stock traders to get in on the prop firm action. PropShop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but PropShop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, PropShop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring PropShop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing PropShop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to PropShop Trader for sponsoring today's live stream. Now back to the show.
All right, and we're back with Chris Pulver. Hey, Chris, how you doing, man?
What up? Happy
Chris,
Friday.
Happy Friday. This feels okay. Did you kind of hear my little rant there about August 5th, 2024?
Yes.
Does this not feel very similar? You have suddenly that was a 100K miss on jobs.
Mm-hmm.
Bank of Japan defending the yen, U.S. Treasury partaking in defending the Japanese yen.
Right.
Markets have been pricing in rate hikes. You've got weaker jobs print the whole week long. JOLTS, ADP, NFP, weaker than expected. Could there be a scenario here where the market this morning is saying, ooh, this is great, we're going to get rate cuts, and then by the afternoon, it's more of a freak out about the economy? That's my concern.
Well, I mean, August is kind of that perfect window for that stuff to happen. Where this is a pretty bad job print. Where look, the U.S. economy needs about a break even like 20 to 30K per month. So any negative is not good, and it also brings the conversation back to the Fed has kind of ignored labor for the last couple of months since war stepped in. It's all about task force, all about inflation, all about price stability. Labor has been like, it's been fine since we've had some decent non-farm prints that have been over, 50K or 100K. Now it's like, tech has been laying off people since 2022. Tech is laying off more people now. Other companies, my fiance works in the airline industry, dude. It is freaking cutthroat right now. Like all these airlines are cutting routes. They're cutting markets. They're not necessarily downsizing people yet, but it's getting to that point where like everything is being watched very, very closely. And like,
Right.
I think American Airlines, United Airlines admitted to anywhere between $2 to $6 billion in added costs with fuel just in these last quarters.
It's tight
So
out there.
it is. It's a little tight for sure.
Yeah. Well, Chris, I also just noticed something. Look at this. The revised number.
Yeah,
They brought
57
it
down to
from
20.
57 down to 20. So let's just do some quick math. That's 30. And notoriously, math is hard to do while you're live streaming, so bear with me. Let's say that's 40,000 less on the last one, and let's say that's 100,000 less today.
Yeah.
That's a huge jobs miss.
Yeah.
An unemployment rate going down to 4.1%. Again, I know what people are going to say right off the bat. Participation rate lower. That's why the 4.1%. Like people are quitting, trying to get a job, basically.
Yep.
Yeah, someone knew something because gold was up 2% before this started. And, gold is just ripping higher. That's the trade in the morning. The question, though, I have is in that August event that we saw in 2024, it felt eerily familiar. Bad jobs print, BOJ defending the yen. And here you go. You had gold move higher on that day and then reversed all of its gains, went super negative, everything correlated to one, and we had a dump into Sunday night. So I'm just theorizing here. But that sort of labor market shock, I think it's going to redirect the conversation a little bit from just looking at inflation.
I agree. Looking at like gold versus silver, I mean, Nick, I think you know how this whole plan was. Okay, we're like think of Doge with Trump and Musk, right? Think of Doge. We're gonna cut. We're gonna balance the budget. Well, that pivoted very aggressively into we're gonna grow. We're gonna grow our way through this debt. We're gonna grow our way through this deficit. We're gonna run the economy hot. I think this is what the next phase is that everyone's been talking about through this fourth turning, which is if we can't grow, then we print. Like we're gonna do like this is kind of the last stages of like, can we sustain this market at these all-time highs? Can we support these economies? Can we intervene when we have to intervene? And at some point, like, does it happen like price action wise where we're trying to support, we're trying to intervene and manipulate, and all of a sudden like price action doesn't accommodate that move? I don't think it's there yet, but I think this is what maybe gold is sensing and sniffing out. So when we look at this run, I mean, silver is running right into pretty key resistance. Gold, same type of thing. It's like 4,400 was a late March low. Once we broke that level, we obviously headed fresh low. So I think the overtaking point for me is we have to have a pretty firm close above 4,400, and I'm looking for a pretty solid bottom. I mean, I'm up to fresh year-to-date highs today, which is kind of nice considering we're not at all-time highs at 77.90. Mm-hmm. And then gold is ripping, so it just shows like that accumulation I've been doing these last 3, 4, 5 months have been for a good reason. And this is starting to show better signs of life. So, yeah, man, this rotation for the second half of the year, it's like gold. I mean, dare I throw Bitcoin into the mix? I mean, Bitcoin's only at 65K. Mm-hmm. It's not having nearly the run that gold is lately, but I want to wonder, like, will those assets come in favor again before the end of the year?
Yeah. Also, we played around with the volume behind the scenes. Hopefully you guys can hear me a little bit better in relation to Chris. Chris, yours was louder. Mine was quieter. So I think we got that sorted out, but guys, let me know if I should adjust volume further. But yeah, anyways, I agree with you, Chris. I think you've had this change. What was lagging seems to be now leading, and what was leading seems to now be lagging. Outside of tech, which is kind of, well, I guess tech was lagging. Now it's really coming back here. You've got the Russell. The Russell's been a winner this year, Chris. For once, it's really been a leader on that side of things. You've got oil continuing to sort of trend lower here. I don't know. It's a very interesting dynamic. You have yields aggressively moving lower. This is maybe one of the most bullish things that could happen for the precious metals is yields kind of plummeting lower. Meanwhile, BOJ stuff, the 10-year for Japan is moving higher here. The 2-year yield, fresh highs, 10-year pretty close to it. The 30-year, a little off from there. Dollar yen, look at this, Chris, down 0.8%. So, maybe the BOJ is in there playing a little bit of this. I know we've been talking about it a lot, but it is, of course, in reference to this ginormous, very serious move lower that we've seen in the exchange rate. We also, I know everyone's got this on their charts, is the 200-day moving average for dollar yen. Huge level of support. We'll see if it holds, but if it starts to go here, if we're going to start actually seeing a more meaningful decline, again, I think that you have to just be a little cautious here when we consider VIX seasonality, which we've been talking about. You brought up August seasonality for S&P 500, jobs data coming in soft. I think that has recipe to spook the market a little bit. So I think it's a bit contrarian today to think so, but I mean, because tech stocks, everything's up today. But my concern is that is a little bit of a, that jobs data weakness is not necessarily something to be too thrilled about.
I mean, it just same thing, dude. Like, reasons to be cautiously bullish. Sure. I do think after the pump to the upside, I keep reading about this vol compression. I don't know if I mentioned this on Wednesday, but what right now the market's revealing, like over the last 100 years, like the most dislocation and the most dispersion that the market has like ever had, and that's on the individual stock level. Meanwhile, we have, I mean, I think this is also why the S&P has been so choppy for multiple months this year, is because individual stocks are all over the place, while the indexes are just like, well, I mean, this one's good, but that one's not. This one's good, but that one's not. And so it's just like, well, the S&P is just hanging out, and we're, within a couple percent of all-time highs, or we're having these compressed volatility moves. And meanwhile, like under the surface, like volatility is screaming on individual stocks. So the Nasdaq recently, we had mentioned this. I mean, the implied volatility in the Nasdaq has been roughly double the S&P all year, and that's starting to kind of weigh in, or like rein itself back in as well. But it's still elevated. I mean, the S&P I think is at 30 IV rank, and the Nasdaq is like 50 something, but it was like in the 70s and 80s. So I was going to say this on the bigger picture. I think the squeeze that we just saw, that is still like trying to test these highs. The squeeze that we saw, in my opinion, still probably bodes well for the markets to finish the year positive. I just don't know if we're about to see. I mean, if you look at my chart here,
If you want to share it,
know.
Chris, I think it's
Oh,
not
I'm sorry,
shared
I
right now.
didn't know I wasn't sharing.
You're good.
Yeah, I just want you to have the screen, Nick. You can just read my mind, put it on your chart.
Yeah, I know what you're saying.
So if we're heading up towards 8,000, I feel like that was a reasonable forecast for a lot of optimists this year. But the tail side was pretty aggressive to the downside. I would say because of this squeeze here to the upside, I think that the market is likely not coming back to break these lows. I don't think we're going to close below these previous highs. I think the market is still going to stay positive for the year. I want to write one number down, 6,800. That is the yearly candle. That's pretty much where we started. So I do think the market will finish above 6,800, but it might be get to 8,000, give a decent amount back, and we finish maybe at like 75, maybe 7,000. It ekes out a little bit of a gain, but what a volatile year 2026 could be. And like, I guess in your opinion, what would change to keep this market like cranking higher outside of, well, I guess we're just going to run into like true bubble territory? Because I think that word's been overused a lot this year.
Yeah. Oh no,
But
definitely.
if we just go straight up to like 8,500, I'm like, I just need to see like just like a distribution pattern, and I'll probably short the S&P.
Yeah, I mean, for me, the conflict in the Middle East is a big one, not because I necessarily, it is geopolitically a big thing, but it's mostly inflation. Like, I think that one of the biggest headaches, one of the biggest concerns of the market is the rate hike narrative. And so if the rate hike narrative gets kind of just pushed back in the meantime, stocks can rally, right? You have like wonderful, wonderful earnings, like remarkable strength on that side of things. So then you have simultaneously this conflict, which has been just sending the 10-year higher and higher and higher. You have to give it to the market. This is what the 10-year yield has done, and yet at the same time, you've had a really positive stock market this year. That is a defying gravity a little bit already. So I think if you were to see the 10-year actually back down, like if you were to see this thing more meaningfully move lower, I do think that in most cases is the sort of thing that could turn this year into a 20-25% gain year.
Yep.
Just another one notched in the record book here. I think it's very possible because this thing has just been, markets love to kind of cluster and have just like 5 years in a row where there's just a banger back to back to back. We've had some pullbacks here. Admittedly, I would have liked a little bit more here, but from a trading perspective, I think fighting the rally is just challenging. Like it's just a game that I don't want to play. And while I may not be investing long term in a bunch of stocks up here, I'll stay with the long side bias
For sure.
in the meantime until something breaks.
Yeah, I'm probably right there with you. I mean, what I've been enjoying for most of the year is just time decay payoff, and I'll probably continue to stay that way. I don't know if I want to get more aggressive in the tech side, or I mean, I wrote down here. It's like you mentioned, Russell's been a big winner. So is the Dow. So is equal weighted S&P. Right, equal weight is actually keeping pace or outperforming. The Dow and the Russell doing really well this year. That's good rotation. The global stock market, VT, had a pretty good run this last week as well. I mean, VT is back up to 161. I'm going to set a chart alarm up here at the highs. I mean, this is probably one of my bigger share sides of like, I have chunks of VT. I've got lots of puts and ratio spreads on here as well. Same thing on SPY Qs, those levels that I picked out. You can see a ton of these in the pulver alerts. You know, on the SPY, it's like I'm doing basically a stack of puts that goes out to the end of the year into the 600, like the 600 area. I did lower than that as well when volatility spiked up a couple of times. I mean, what's your window on like a VIX long? And also, do you have like do you think the VIX is going to be like a flare up to like 20-ish and then it comes right back down? Or do you actually think we have a VIX event? Like, do we have a 40 VIX? Do we have a 50 VIX on the card or in the cards for the next like 6 months?
VIX, we talked about this the other day. It is an inherently tricky thing to be long. Just in general, it's a hard trade. Because even if you think that the VIX could have a big move, you know the bane of the existence of trying to long VIX is timing it, right? Because
it's so tough.
It's so hard because you could be like, okay, I think the VIX is going to have some kind of by end of year move higher. But if you're off by a few months, it doesn't even matter, right? Yeah. So my thought process with the VIX is if I was to take stabs like VIX calls, for example, I have to give myself out to like February or March of next year. Like it would be a longer, because timing it, if I'm working against theta decay there, that's so tricky. Yep. But simultaneously, VIX, you don't want to overpay for calls. So like it's if you were to take the trade, would you not want to try to stick within the minimum amount of time that you're expecting to see something? So if you're thinking you could get name your selection, surprise rate hikes and or, for example, what am I thinking of? Midterm elections. Like if you had some surprise, Iran goes awry, right? That was catchy. Iran goes awry. If that happens, like you could get some kind of event, and the window, if we're going off seasonality, is somewhere in September, October, November. If that's your window, theoretically you could play that by buying, end of November calls. But that's a little bit more aggressive. You're giving yourself less time. Short answer, it would have to be just when I feel like the VIX simply can't go lower, and give myself room for it to go lower anyways.
Yeah, I mean, we've seen the VIX down to 13, 12. I mean, yeah, I really think the markets have found a way to just do well at suppressing volatility, and then when it is flared up, it's a short-term flare. Zero DT flows like kick right back, and I think that's another reason why the VIX is such a quick reverting instrument. Is, I mean, look at how eager this market is on one down day to buy the next day, like to just pump it up, and zero DT flows are a lot of that, because all you really need is, you're making a one-day bet. You don't have to invest for the next 3 months to see if the market's going to go up. You have to bet for today. If the market's down 1%, buy it, see if it goes up the next morning, and guess what? That's probably working very well for a lot of traders this year if you just make it that simple. And the VIX on those days, the VIX is not going higher. The VIX has no follow-through. It's up to 17, 18, 19, 20, and then it's back down to 18, 17, getting smashed back down.
Here's a monthly chart.
VIX. Yeah.
Yeah. Here's a monthly of the chart, kind of just to go with what you're saying there. It's like, you've had these moments in the last few years where VIX has flared up, but it is just ever declining, like very, very brief windows where you get the pop and it's gone. Like you get very little volatility continuation. Last time we saw, I know we've talked about this a lot of times, a meaningful VIX, elevated and staying, 2022, 2020, 2021, you had a good bit of volatility baked into the market. We've been in sort of a trend lower for a while. Like this is a 200. Well, let's do a little bit lower, shorter than that. Like volatility, just generally speaking, has been kind of trending lower on a monthly chart basis for some time. And at some point it changes, but gosh, it is not something easy to time. Nothing is, right? Timing is inherently the most difficult thing when it comes to any chart. But VIX, again, I think if you are looking to buy some insurance, aka buying VIX, you're looking at like the 14 to 13 seems like a bottom end of the range. Of course, you've had times in the past where it has gone lower, but that just, at least in recent history, seems like where it generally bottoms out. So we'll see. S&P 500, again, it's just a tough tape to fight here. The market seems to want to go up. Earnings are strong. We'll see what the Fed does if they, and again, I think that you're getting some evidence right now that is going to push back probabilities for rate cuts or rate hikes. Like I think,
Sure.
this softer jobs, softer or expected end of the war in the Middle East, if that is what the oil price is kind of telling you, seems like right now the market is kind of cheering on the idea of less rate hikes.
Yeah, I mean, I don't know if we're going to get one. And look, I think the equities market would love the fact that we may get zero, like just pause. I don't think we're going to get cuts anytime soon. Trueflation is still up. Like Trueflation is now showing like 2.32 versus I think what was maybe a month ago 1.8. So I mean, we're seeing like elevated inflation. I think we have to admit like AI has been a source of inflation. Circular financing is getting more expensive, but right now it's like maybe the big picture play is that the Fed and so it's basically Warsh and Company and Besant. They want to try to get the 2-year down, the 10-year down, the 30-year down, mainly the 10-year. But if they can get those yields down a little bit, I think that does give the market the relief that it needs to continue to run and run a little bit hotter with this drift. I get that the Middle East is still like a sticky point, but I can't believe that we would drag this into midterms. I don't think I mean, I feel like that is maybe one of the more frustrating things of the entire year for this economy, where it's like supposed to be, this is all about growth and all about AI. It's like, why are we doing this? I really don't know. I don't know what the end game is. I know that oil's been, a wild and crazy move, but I don't know what the sustainability of this like conflict is. So ultimately, I do think that the U.S. could yield, and we're going to declare victory, although nothing really changed, and we just spent a bunch of money and being in the Middle East for no reason. Or if there's something I'm missing, like let me know. But it is a weird thing, like as far as the financial markets and how much we want to be, king of AI. And right now, like our king of AI is what on the hardware side, pretty much.
Yep.
But one thing that could be changing is we need to see the bond market cooperate. The yields got really, really aggressive there. I think they were smelling a rat. But gold has made an impressive run too. So, Nick, I think we're going to see like that powerful combination of fiscal policy continues to dominate, and that the Fed is being enabled to not have to do anything. They don't have to cut, but they don't have to hike either. And I don't know and again, like, is that losing credibility for the Fed? I mean, we don't really have clarity out of the Fed until probably the end of the year when the task forces reveal their, amazing discoveries, which are, we need to be more real time. We can't be backwards looking. We need to have like better data points, and that's fine. But it's going to take them 6 months for them to tell us that. Meanwhile, this is a weird seasonality window that I think the market is always vulnerable. End of this month, we have Nvidia as well as Jackson Hole. It is a very like illiquid month to trade, and the markets can be pushed around and whipsawed. And it's just things you have to be aware of as a trader. If you're like going to grind through August, you could be getting some fake out. So I think because we had this aggressive pop to the upside, 2 fresh all-time highs, I think that keeps the posture there where it's like, okay, this market wants to try its best just to finish positive. So a little shakeout hopefully doesn't scare anybody. A little whipsaw doesn't take your big picture lens off. But I'm not crazy aggressive at 7,750, almost 7,800 to say I'm going to push like crazy bullish into the end of the year. It's like, dude, I'm just going to be doing what I've been doing all year, which that pop we just saw rewarded me very well. If we grind higher, as long as we're not making like nasty pullbacks to, I guess at this point, like 7,000 or nasty pullbacks towards 6,500 or 6,300, then I'll limp in with a bunch of time decay and time premium and still maybe push towards like 20+% this year on my own portfolio.
Yeah,
so we'll see.
Not too shabby. I think in terms of where I'm most convicted, I do really like gold. I am going to make the prediction here. I'm not going to place any trades on this, so please do not copy what I'm saying here. But I would not be surprised to see if you get some selling today. Not necessarily because gold is bearish, but because of my little case study there where you had a really soft jobs print and an incentivized U.S. Treasury and Bank of Japan that wants to see the yen stronger, the dollar weaker, yields move lower. yeah, my opinion here today is you might have a little bit of a turnaround on some of this stuff that is up right now. I could be completely wrong, so please understand what I'm saying here. I am not going short the S&P 500, shorting gold. I'm not doing that. I'm just telling you, I wouldn't be surprised if you get the fade today. And honestly, if you did get that fade, I'm interested in gold longs around 4,200 for a continuation play here. So I'm actually kind of more hopeful. I'm not actually placing trades, and I don't, I think placing trades on hope is a bad strategy. So I'm
Right.
not betting the intraday reversal here, but I think there is the recipe for a little bit of an intraday turnaround. Dollar here weak right now. I think that softness in that jobs report is meaningful. And while stocks are initially popping off the idea of lower yields, my concern there is that you could have a little bit of a so let me tie this all together, because I know it's kind of hard to follow. If you get a dramatic opportunity for the BOJ and US Treasury to follow through on this yen stuff, right? Follow me here. You have yen gets a lot stronger today on the opportunity of a weak jobs print to really sell into that on the open markets today. If that happens, what does that do? Well, that causes a significant selling of the dollar, and the yields world in Japan, if that skyrockets, if that keeps moving higher, the reverse carry trade, the unwind of the carry trade, can be a bit of a global margin sort of thing. There's a lot of margin that is applied through the Bank of Japan stuff. And so, borrowing yen at low prices or low borrowing rates and deploying it into U.S. tech stocks is a very common trade. We saw this, again, as I mentioned earlier, August 2024. So that's my opinion, is I think you could see some further selling of U.S. dollar, U.S. treasuries, and buying of yen. If that happens, I do think that you could get some profit taking in stocks, some cash withdrawals from those places. Because remember, if the BOJ wants to support the yen, or the Ministry of Finance, whoever, if they want to support the yen, they need to sell U.S. denominated treasuries, and that forces a lot of kind of margin reduction globally from a lot of funds, pension funds, who have been piggy banking the BOJ low interest rates for a long time. So that's my fun prediction for the Friday.
So, I mean, you're saying that for Friday as far as how things maybe start to shape up. I mean, is there follow through there? I mentioned this. I think I mentioned this on Wednesday, but I think for the daily time frame, and again, my thoughts and feelings on the yen. Me and the yen don't get along very well. But if we see, like when we had this intervention, it did test the low, but it proceeded higher. We had an intervention, we tested the low, but we proceeded higher. I'm kind of looking at the same thing. If I wanted to get long the Japanese yen, meaning I should say long dollar yen, I would be looking at a small trade now, a small trade here at the lows, and this is the hard part, a daily candle close, which does make it like you got to trade freaking small, because who knows if we have like an intervention candle that pushes this even lower, and that could be hundreds of pips below that low. But if this market is the same story, which is test the low, go up, test the low, go up, test the low, go up. I mean, if I'm in now small, accepting that, anywhere between 100 to 200 pip extra buffer, trade small so I can absorb that, not really worry about it, maybe keep the risk under $1,000.
Yeah.
But if I'm right and this low holds and we get all the way back up into here, this is where I think this is a risk on everything rally. Like equities are up, Nikkei goes back. I mean, Nikkei's had an 18% correction. If it's going to go back and try to retest highs, this to me is like U.S. markets are resilient once again. Nikkei recovers, and this is risk on across the board. But this is what we had like that summer 2024, which was the Nikkei's down 26%, the S&P's down 10%. This is risk off.
Check
and
this out.
I don't know if this is like the way to think of how simple the market's going to be as a whole, but dude, I think this chart does mean a lot as far as like where things go.
So here's exactly, I was going right where you were at with that. August or July of 2024, big dollar yen selling. Then the really soft jobs print. Initially, markets moved higher. They then tanked lower into the market day. Then, to your point, bounced, came back, tested it a couple weeks later, continued higher.
Mm-hmm.
So I would say that if you do get some kind of asset flush like we saw in August of 2024, if that were to happen, I think that is what we learned from that scenario is exactly what you're saying. That's generally, at least we're looking at this as a historical reference, that was a really good buying opportunity because people absolutely panicked. And it was anytime I
well, that was a SOM rule triggered, right? Like that was a combination of Nikkei, Japanese yen, SOM rule are like, we're like, oh fudge. And it turned out to be a freaking V bottom.
Yes, and it was a margin induced sell off. Those are also some of my favorite ones to buy because
one thing we didn't talk about, is your take on situational awareness with like Leopold Aschenbrenner, like that? Was that enough of a bottom marking thing to show like his fund situational awareness along with others? There's probably hundreds of other funds that are in the same type of situation. They just won't make headline news and saying, "Hey, Citadel, bail us out." But that could mark a bit of a tech bottom with like how much leverage was in the AI space as far as investing goes. So again, doesn't make it easy. Doesn't mean like it's just, oh, this one fund blows up and everything's going to be bottomed out and all we go to the races. But that essentially had a major hedge fund with like $45 billion in positioning showed their cards on where everything was on sale. Yeah. And so all their pain was basically Citadel's gain. So anyway, I just think that type of cleansing might also be another reason to keep this market like postured up, which is why I think we saw the big squeeze that we did after that happened, because this was a combination of FOMC day, Aschenbrenner gets bailed out by Citadel, and everyone else is like deleveraging, or like somehow it's like open season on like buy these freaking dips. Everyone that's in pain, whoever can absorb it and take it on with no leverage is probably going to benefit from it. Right. But I think that was an interesting flush out last week.
Yeah. Yeah, we'll have to see. I think it does. Those sorts of headlines certainly get a lot of attention, and they, I think, can be a little bit of a sentiment reset once you see somebody get flushed out, which is just it's harsh, but hey, this is the markets, right?
Yeah.
If someone gets flushed out, a lot of times it is a bottoming signal in some ways. So we'll see. Chris, we've got our next show showing starting here in just a second, and you've also got to go. So thanks for coming on, man. Have a nice weekend, and we will see you on the next one.
All right, you guys too. Thanks.
See ya. Guys, last thing I'll say, try out the Edge Finder. We've currently got some trials going on. We're allowing people to check it out for 30 days, get access to our free course, etc. If that is something that you're interested in doing, we'll drop the link here to that in the live stream chat. Alternatively, if it is easier for you, scan the QR code. You got one right below my camera here, which will allow you to sign up for that trial. It also comes with a completely free to access Edge Finder and fundamental analysis course. So check it out. There you go. With that said, guys, up next, we've got Alan Perez. He is back for show segment number 2. Don't go anywhere. He's got some interesting takes on this NFP follow-through report. We'll be right back. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. How you guys doing? What a crazy volatile day to start it off here. I was not expecting a miss of that magnitude, I will say, but it is it's crazy to see. What are you guys thinking, guys? What are you guys thinking? Is there follow through? The case but could be made for both, right? A continuation of this, like for example, in dollar yen, for example, a continuation to the slide lower, or do you have a little whiff of slide lower and then a V bottom bounce, right? I think both of them are pretty good cases to be made. Dímelo. Yes, hello, good morning. Good. Did you TP? Not yet. Euro dollar's getting close to that, so we'll see what the follow through there. I'm not shooting for the stars on euro dollar. I'm trading zone to zone, so Steven says, I'll highlight your message here shortly here, Steven. But with euro dollar here, you're getting close. I'm just targeting, the upper end of this range right here. So this is kind of with the 200-day moving average and that level of resistance right over there. This one I'm just trading range to range right now. If you were to surpass this and then keep going higher, then maybe I re-enter on a retest or whatever the case may be. That's actually a really good question that I should start asking myself too. Is like, okay, I was kind of positioned for a potential shift in the dollar, right? A dollar unwind, if you will. It's starting to prove itself that it's starting to kind of work out and follow through with that. But like, how much do we go? That's the big question. So I will say this is a level I'm watching on DXY, right? 200-day moving average, very important. Likely this would be a level that if you are a dip buyer in US dollar, you probably step in at that level. So 99 handle, 99.25 right over here is where I would expect some kind of a stall in the fall of DXY. If you see a stall and kind of a V-shaped recovery, then I'm kind of cautious there. I'm taking profits and I'm assessing the situation again once more. But if you were to flush right below this 200-day moving average, you see a break, retest, and continued lower, similar price action to what you're seeing with dollar yen, right? Where you have a break of the 200, retest, you hold it, and you're shooting lower, then I think the case could be made for dollar unwind to continue to roll out. So that's what I'm looking for there on that side of things. So yeah. Let's see. I have a message here. Okay, I'll fix that right there in a bit. Good afternoon, Ellen. Good afternoon, man. Just in time to cancel the rate hikes. So that's kind of been the framework that I'm kind of thinking is going to happen. Is Marco and I we've said, I'm thinking that the hawkish case is going to be just no rate hikes, right? Like just holding rates where they are right now and letting it fizzle out. And so you're seeing here on CME Fed Watch 2 that we had at one point the next rate hike was in September. Now that is no longer the case. Now there is a 60% probability that we hold rates September, October, and the next rate hike is in December. And it is only one rate hike from there. So instead of, we went from 2.5 rate hikes to 2 rate hikes. Now we're only getting 1 rate hike in December and maintaining that rate for the year's end. So very interesting to see that there the probabilities of interest rates are shifting in real time. And so I think the Fed is now going to be a little bit more neutral coming off of a super hawkish stance that the market was expecting. Yeah, crazy. That's what I meant to say. Definitely coming from hikes to hucks to cuts is what I think is going on. Who's your favorite rapper? Bro. Favorite rapper? I would say I've been very consistent with this, but I'm a big fan of Drake, to be honest with you. Early days till now, he's hasn't fell off not once, whereas the longevity of like an artist's career is like short-lived, So I could respect that. Diversity in his songs too. Like you have your Marvin's Room, and then you have your hype songs, and then you have your not so hype songs. So I think that's to answer that question. But that's as far as I'm gonna go. I don't want to deviate too much, guys. This is a trading live stream here, so we should go ahead and stick on that theme there. Alan, did you close your gold position? No, I still have it running there. It was up 3% at one point, so what I did was I have my stop trailed below this structure right here, this 42 handle here, this previous breakout. Actually, let me turn this yellow for you guys. Previous breakout right here. We broke it, retested this, held as support. So my stop loss is just trailed below structure, and I'm going to continue holding it on and let it do its thing. I will say that we are closer now than I would have thought we were going to be to that 200-day moving average. So that's kind of my level of resistance that I'm looking at. You could also make the case too that we are tapping into resistance right now, looking at this level here. So that could be the case. In fact, it makes a lot of sense looking at, I think Nick had this level here. So I'm going to make this resistance. And then I'm going to say this. I'm going to say that if you were to get another breakout of this level and pull back and it holds, then I just bring my trailing stop to here, and then I just continue and let it ride. So we'll see what happens today. This would also be actually good protection too in the events that you get to sell everything later in the session or going into Monday. So I kind of like that idea. So hopefully we do get a continued pop in gold and a retest, and this level holds, and then I can just trail my stop further a little bit and secure a little bit more profit there. Who's your favorite soccer player? Then we can deviate to trade. I'm actually not a soccer fan at all. I'm not a football fan. I'm not a soccer fan. I really rarely watch sports. The one sport that I've been very consistent with is basketball, though. I love basketball, but even then, like in recent times, I really haven't been keeping up with basketball too much. So, yeah, sorry to disappoint you there. Hey, Marco, how you doing, man?
Hello, Alan. I'm good. We had a pretty volatile NFP, which I love to see because volatility is where the opportunity lies. So a really poor print. I think we can pretty much kind of say that the next Fed meeting is not going to be a hike. I would say I'm 99% certain of that. The probabilities for the Fed watch tool have moved a bit. So the next trade would be to sell dollars, basically. Sell dollars, although I haven't yet decided what I want to do, which currency I want to use. I want to buy gold, absolutely, but on a pullback. As far as currencies go, I still haven't found the one that could be strong enough to buy against the dollar.
You know what? The chat here is telling me something. USD CAD shorts, Marco. So we had non-farm payrolls today for the US. We had employment data for the US, but then you also had stuff going on for Canada as well. And the Canada numbers looked good. So you kind of have like a really weak NFP report against a really strong job report in Canada. Let me go ahead and pull that puppy up for you. Canadian employment change here beats, right? 75K versus 20K expected. Canadian unemployment rate also ticked down lower to 6.4 versus 6.5%. So this is a pretty good kind of polarizing opposites right there, where you have Canada doing well and the US doing poorly. And just looking at this chart here, USD CAD, it is continuing that slide lower. So I'm curious to see, like, I would say the next target would be either this level of support 1.39 or this 200-day moving average. Is pretty probable that we tap into that. The question becomes, where do you enter? What's your risk management look like? And is the risk reward worth it? Because price is already moving your way. You have potentially 92 pips to cover to get there. But again, it's like, are you very like tight with your risk management? Like, what does that look like? Do you wait for the NFP candle to kind of mean revert a little bit and get filled? Like, what does that look like? That's a big question, but I think that's one to answer that question for you is like, what do you sell or what do you buy against the dollar? I think CAD looks pretty good. Okay.
Very interesting that we got first good Canada data and then bad US data. So this is getting slammed. I would say pretty unexpected report, and it's always funny to see the effect on stocks, because you never know if a weak NFP will be bullish or bearish stocks. Well, it's actually bullish because the markets then expect a dovish Fed, which is much better than, let's say, a jobs market that is deteriorating a bit. Plus, the unemployment rate stayed the same or ticked lower. Something very strange happened with the unemployment rate.
It ticked lower.
It ticked lower.
I think the overwhelming kind of number to look at is the NFP report and then the revisions too. So previous was 57K, and then they revised it down to 20K. So that is a huge swing there in that sense.
Yep. So this was definitely an event. Now, some people may be wondering or saying I should have traded this. Well, if you actually look at the 1 minute chart, your edge in trading the unexpected NFP is absolutely zero. So if I go to let's say you traded the gold on the 1 minute, you can see it was just a immediate spike to the upside. So these are all of the algos that are trading an unexpected NFP. So you have no edge in trying to trade this. So don't feel bad if anyone is
Well-
feeling bad for let's say missing out.
Well, Marco, if you were on the 1 minute chart on gold, and if you saw the fair value gap right before and the liquidity sweep, you would have actually caught the entire move, no drawdown.
Okay, you are correct on that. I did miss that point. So
Yeah.
if you're an ICT trader, you probably made money. But if you're just a regular professional trader, it's much better that you stayed out, because the spreads would absolutely kill you, and you would basically lose a lot of money trying to catch the move.
Just jokes. Marco, let's talk dollar yen. Okay. Dollar yen here, they intervened right around here. I'm gonna zoom in a little bit to make it easy on the eyes.
Again?
Well, no. Sorry, I should have finished my sentence there. They went ahead and intervened here, as you saw, weakening U.S. fundamentals. Now you have another window where they could also intervene on top of weak U.S. fundamentals and possibly fuel this thing even lower. What are your thoughts on that? Do you think that they take advantage of the opportunity? Is it enough to bring it down lower? And if they were to intervene, what kind of a bottom are you looking at? Are you looking at 155, 152, 153? Like what's kind of like your bottom that you have in mind?
That's a good question. And I would say if they were smart, they would intervene right after the weak NFP, because it's a great opportunity to slam it down even more. I would say also a target would be 153, something like that. I think we can reach that 154 maybe. We have 4 major catalysts pushing the yen up, which is intervention, hawkish Bank of Japan, possible surprise rate hikes. You have the pension funds buying domestic assets in the background, and you have Scott Bessent and the whole of US basically on the side of Japan, because usually it's a one-sided bet or a one-sided intervention. It's only Bank of Japan, but this time it's a correlated move. I also saw some chatter on Financial Juice that kind of they're going to intervene now.
Katayama, yeah, they said that they're monitoring. I'll pull it up for you. I saw that too. We have been closely communicating with the U.S. Both sides won't hesitate to intervene. That was only 4 minutes after the NFP report. So that is not a coincidence, I would say. I think that is an attempt to have some verbal spooks to kind of fuel this little decline, and then maybe they could, like you mentioned, step in and take advantage.
Yeah, and Scott Bessent kind of pooped the bed with the fake note that was staged for reporters. That kind of tells you, like, is this guy serious? If he was actually serious, willing to place billions on the line, trust me, he wouldn't try to signal something to reporters in a stupid note. So that kind of discredits the power of the US in this story. But still, the initial move was bigger than usual. It was 5%, and usual interventions are 3 to 4%. So I think one leg lower is actually very likely to happen. And I am a bit surprised that they didn't act after the NFP. It would have been such a good opportunity. So that is pretty strange, but they can still intervene later today. It can happen.
I was gonna say, man, never say never. Like the last one was, we even had one, I think, like in the last hour of the session. It was like, what was last weekend, right? Last weekend. Let's fact check this. The day was calm, and then you had another. Yeah, Friday right here, Friday 3 p.m. It was like pretty quiet, and then they had another whiff right going into the weekend where they hit it once more. So I think it's still early on in the day, and they definitely have chance, and I would say a probable cause to go ahead and intervene once more.
Yeah. I think there's a massive level of support. If you go to the monthly chart, I think we will see one massive level of support where things can start to stagnate. Well, not really. Yeah, I'm going to have to look at my chart of USD JPY. I think I saw a massive support. Well, 140 would be a massive support level, but that's way below there. So I think 152, 154 could be easily achievable. Yeah. And long term, I think we get maybe an even more steady trend of yen strength, because by all of the catalysts that the Japanese government is talking about, some of those things they take months to play out. So the pension funds, it takes a very long time because of bureaucracy, because they're slow, because they have a huge amount of capital. It takes months for them to unwind their positions out of foreign into domestic. But so we got some more clarity on the US dollar. Personally, again, I'm expecting a dovish Fed on the next meeting. I'm definitely going to play that. And I'm expecting probably no hikes this year, I would say. What do you think is still a good play? So I know you're in euro dollar. Do you have a set take profit in mind, or are you willing to hold it? I think actually holding it wouldn't be such a bad way to go.
I have I'm getting closer by the day to the take profit level. I just have a very simple, very obvious zone, which is that which is going to be right here, 1.162, give or take, where that 200-day moving average is, and this level of resistance. So we're not too far away from that. That's kind of where I'm looking to kind of take profit at. And the reason being is like going to DXY, you do have support right here at the 200-day moving average. So I think two things could happen. I think one case could be where you have a stall of price or some kind of a pullback of some sorts. And at that case, I would like to secure profits here and then just re-enter. If the trend and the fundamentals and the theme, the regime is still the same, that's kind of one option. Also, two, if you were to get to the 200-day moving average, you have a real case and a real level where if you have dollar bargain hunters out there, that would be the opportunity for them to go ahead and step in. So I think that, tapping into this 200-day moving average will cause some resistance to the downside. And so I just want to like kind of take profit there. If we get a pullback up to like here or something, or maybe even here, I reevaluate the situation and I just short again, right? Like you can always get back into the trade. So that's kind of what I'm looking for on euro dollar.
Yeah, I like that. I think that's pretty good. Yeah, so that's kind of how I'm seeing the overall markets. So I have a yen view, which is bullish. I have a dollar view, which is now bearish. Do we care about the Middle East? I would say the market doesn't care. I'm seeing oil prices being kind of low and trickling lower, even though we still didn't get the opening of the Strait. We still didn't get the deal, and apparently we were supposed to get one by the end of this week. So looks like that's not going to happen, which, to be honest, was totally expected. But what is the most important? Have the markets moved on? Do the markets care much? They don't seem to be very concerned. Like oil is 77. That's pretty good, I would say.
Yeah, it is. I kind of say that like if oil can just kind of chill out right here under 84, 85 and just kind of hang out within this range, I think the market really just kind of doesn't care what happens to that. I think that on June that this range of oil proved itself to be helpful in taming inflation. So as long as you kind of stay within this area here, it's cool and dandy. Now, if you were to see something pop out of the ordinary like this, then of course you have to reevaluate the situation and kind of flip flop a little bit. But yeah, I think like I'm always wrong on this, Marco. I've been consistently wrong here, but I'm an optimist, and I'm like, hey, it's probably gonna end here soon, and it's probably not. So I'm it's probably not. So I do expect that maybe we would just kind of chop into pieces here for a little bit.
Yeah. I think we just stay a little bit elevated for longer, and we don't get a deal, and we don't open the Strait. But the only thing that matters for us traders is that the market has moved on. I would like to see that, which can help me to just go ahead and short the dollar even more. And stocks are up on the day, so that's pretty good. I'm back to buying breakouts on individual stocks. Although I'm not seeing a lot of opportunities on the watch list at the moment. Do you have anything else that you like for today?
I'm gonna hold firm with my positioning. I'm just gonna let it do its thing. I'm kind of in a good spot really where I can just monitor and trail along the way.
Yep.
But I am watching as far as development side of things, as far as follow through, and as far as like confirming my bias further. Definitely looking at yields. So the 10-year yield, it's still elevated, right? It's still creeping up here. But if we can somehow break this trend line to the downside, we haven't been able to do that once. So if we were to break this level here, then that just confirms that we've really gone from 2 rate hikes to neutral to potentially dovish. So I'm watching that. The 2-year yield is leading, I would imagine. If this thing can load.
I'm having the same issues with my trading view. On some days, it's just super slow when I switch through the assets.
So with this one here, the 2-year has successfully broken and tested this level and continued lower. So we'll see what happens there. But that's pretty much all I'm watching.
Yep.
Also, too, someone in the chat, some more Bank of Japan talk. That the moves in the Forex market have been affected by moves not backed by real demand. So they're kind of basically calling this not real demand and artificial. And I mean, this is a problem that they're trying to fix, right? They're trying to have this currency pair move off of real demand, not just speculation, arbitrage opportunities, and things of that nature.
Yeah, and probably the carry trade, right? I think there's a lot of people betting on the carry trade, or there were. Some of them probably got washed out, but there's still a lot that are in it for sure. Yeah, basically you're positioned exactly how I would like to be positioned for the next week. So that's what I'm gonna try and do. So next week we're getting the CPI, we're getting the inflation. Does it matter? You know, that's the question. Does it matter?
I think in a weird way, if it were to come in line with expectations or flat, the trend continues. I think I think even in that case, the trend continues. I think what would really move the market and continue this move is if you see a tick lower, then you can start to make the case that the last month's print was not a one-off event, and it is starting to show signs of inflation trending lower. I think that would be really, really good case for the dollar bears, obviously. And then a hot print would really kind of disrupt things.
Yeah. Although a hot print may give you a good entry to sell the dollar, because the dollar would probably rally into the print. So selling right on the top could be smart. That was something I was actually looking to do today. If we got like a strong NFP print, like 100K or more, it would have been a good opportunity to sell the dollar. But of course, the completely opposite thing happened where we got a super weak print. So yeah, it is what it is.
We'll see, man. It's an interesting day. I'm happy to see that rate probabilities are reflecting that. Let me refresh this one more time to see if anything has changed. But we are now looking at. We went from two hikes to now what we've said, Marco, consistently is becoming more of the case where you're getting more to the camp of like, we're probably just going to hold rate steady from here and just let it play out.
You know what? I'm not going to say 100% sure, but 95% at least. Like if Warsh hikes in September, it would be so crazy. I just don't think he's going to do it, especially now with the bad NFP. Now he has material to say the jobs market is falling, so we need to keep rates lower. I think it's going to be a simple trade to execute. And also one thing. Go
ahead.
I want to say one thing that is interesting today. So in my comment section on my first segment of the stream, I had like 10 people saying, look at gold, look at gold, look at gold. Like gold is up, gold is up, gold is up. And like, weren't you bearish? Weren't you bearish? Weren't you selling? So there's like a lot of people that are super happy that gold is going up. I'm happy as well. But euphoria is usually not a great sign. So I'm hoping a pullback actually does come on gold so that I can get in. And yeah, we'll see.
Not too big of a pullback, Marco. Not too big of a pullback, but I would imagine that it's gonna be a great time for the gold content creators. I will say it is coming back into the picture. This is definitely getting a lot of attention.
Yeah, I'll spam.
I'm definitely gonna milk the story on the A1 socials as well. So you better believe that your feed's gonna be showing lots of gold right here, and I'm definitely gonna take advantage of that.
Yeah, I'll spam the crap out of gold as well on Instagram.
All right, man. Well, I'm gonna go ahead and pivot out here. I'll let you do your thing. This was a fun, eventful NFP report. Not what I was expecting. I was expecting either in line or a slight miss, but not a huge miss. So this is something different. And we'll see.
Very unexpected.
It could be very weird because you could have a sell everything coming into the close or coming into Monday. So that's something that you have to be mindful of as well.
Yep. Well, good luck with the positions. I hope you're close to the phase 1 target because it seems that you are close. So congrats on that. That's amazing. And we'll talk on Monday.
Thanks, man. Take it easy. Bye-bye.
Yep. See you. Goodbye. So let's continue with the rest of the show. If you have any questions, any chart requests, anything you want me to look at, put it in the comments. So Steven says, Scott, peasant. Marco, could you flex your muscle for 2 seconds? We want to see. I feel it's a bit inappropriate, but about the note. So Scott, Besant, note. This is what I was referring to. To do buy Japanese yen 5 to 10 billion. Yeah, like if you do this kind of stuff, usually you don't have a lot of credibility. Usually you don't have the money to back up your claims. So you need to do these stunts for reporters and for the retail to kind of move the yen for free. And it usually doesn't work long term. So that's not something that I like a lot. But I'm still happy to keep on buying the yen. I'm still happy to hold my Swiss yen short. Marco DAX, please. Okay, yeah, sure. Let's take a look at the DAX. Looks pretty good. I mean, I wouldn't touch the DAX with a 10-foot pole because it's just super flat overall and has been mostly corrective. And like the outperformance of the US stock market and the Japanese stock market compared to the DAX is crazy. So not my thing, but it's starting to look bullish. All of the equities are starting to look really, really good. So it looks like the stocks have opened. Okay, SpaceX, which is a position that I have, is moving up a little bit, which is good to see. The SPY or the SPX is doing okay. Minimal pullback, all-time highs, looks actually very good. Sluggy says, I'm short on UJ. Let's see if we get some action by Japan. Gold up too much too fast. Buying more yen at this point is not good for Japanese stock market. $90 billion wiped out recently. USD CAD. It's all right, dude. You do your thing. There are arguments to buy this dip, but there definitely are risks today on intervention after softer prints. This isn't the right channel for flexing muscles. Yeah, I'm a bit too shy to do that. So you can catch me on if I ever open up a bodybuilding channel or something like that. Gold. So USD CAD, gold, and stocks, right? Okay. So USD CAD. I do like it. And what Alan said definitely makes a lot of sense, but it's now a bit overextended. So it's not going to be my pick, most likely. Let me see AU. NU. I think AU is fine. I think buying the Aussie dollar should be okay. NZD not so much, because I think too many rate hikes are priced in by the RBNZ, and just their economy is not doing so great. Hiking rates massively into a weak economy, that's not a good recipe. USD Swiss, shorting this, no, I don't like it, because the Swiss may be replacing the yen as the funding currency, which means it is going to catch some bearish pressure. USD MXN. Well, USD MXN is not a bad idea. You get paid positive swaps. Was I short on this? No, I just had a experimental idea, let's say. Damn, I should have. Fuck. Anyway, USD MXN, not a bad way to go there. You can buy stocks if you want as well. You know, if you're betting on a weaker dollar, you don't have to do currencies. You can do stocks. You can do gold, which is my personal pick. Whoa, gold rallying up, really healthy, really healthy. So I'm looking for a pullback on gold. Then I will try and get in. Silver moving up, but not as much as gold. Gold looks a lot better. One thing that is a problem, crypto is flat. So crypto is super flat, doing nothing. That is a bit of a warning sign. Not sure what is happening with Bitcoin because stocks are up, gold is up, yields are down. Why is Bitcoin staying flat? Possibly because we ain't done yet. Possibly because we need to see further downside on Bitcoin. The yen will soon cause pain. What about gold? What if the S&P makes 10% correction? What will happen to gold? You guys just want to see gold. You don't care about nothing else. I'll be the head coach. Copper losing momentum. Marco open a bodybuilding channel and start abusing peptides. Well, definitely something for me to do. A second channel. Let us know when you do, Marco. Gold prediction. Waiting for the pull down because Bitcoin sucks. That's a good contrarian indicator. So once all of the retail starts hating on Bitcoin, once you see your Twitter page full of bears on Bitcoin, that's actually a good time to get in. I'm not seeing it yet. I'm also seeing Saylor. If you want to have a laugh, go to Twitter, open up Michael Saylor, and look at the song that he created as the Q2 earnings report. So he made a song out of the earnings report. It's super cringy, and it's a big indicator that the company is screwed. I wanted to say the F word, but I don't think I can. So I think before we get another leg up, before we get another rally on Bitcoin, we need to wash away Saylor and all of his pyramid schemes and all of the shadiness and all of the scammers that you have, or mainly him. You have a lot of scammers, but he's like the number one scammer. So once we wash away with that, and the best way to do that would be if Bitcoin goes to 40 or 30K. I think at that point Saylor should kind of be gone from the space, and the MicroStrategy should be done, or at least in a lot of trouble, and then we can go back up. I also want to mention the sponsor of today's stream, which is going to be Ola Prime. So if you guys are looking to get funded, do take a look at Ola Prime. So Ola Prime, you can get 20% off with A1 Live. Whoop, A1 Live is the code. So what I like about the company is they don't have a consistency rule. So no consistency rule. Their Trustpilot is good. So before you decide to go with Ola Prime, definitely run through the Trustpilot, read through the reviews. Okay, read through the reviews. Join a Discord. You can join the A1 Discord for free. You can see what the traders in the Discord. So you can see the traders in the Discord had some payouts. They like the experience. And you get 20% off with A1 Live. So do check them out. Taylor needs to sail away. Sailor needs to sail away. I would say so, yes. We need a cleaner space. And it doesn't make much sense for such a scammer, let's say, to survive a bear market on Bitcoin. It just doesn't feel right. One thing that is really surprising me out of all of this is that the markets are kind of ignoring the Middle East. If you look at the Hormuz traffic, so this tells you how many ships are passing through the strait. Very little. Trade volume, very low. Okay, so very, very bad. But oil is not really rallying anymore. So oil had quite a significant rally, and Brent is a better indicator than US oil, by the way. So Brent had a push up of 30%. That's a lot. That's substantial. But now it's down. Around 11% lower than the peak. We are now kind of at the bottom of the range. So if this is the elevated range of the conflict, we are now at the bottom. So that is surprising. Can the markets move away from the Strait of Hormuz? I don't know, maybe. But if it does remain closed, inflation should stay elevated, and that should bring more pressure, let's say, on the Fed. So that's one of the things that I have going in the back of my mind. I did tell you I want to sell dollars, and I definitely do, and I most likely will, buy gold and buy, let's say, Aussie dollar. But an opposing force is still the Middle East and the Strait of Hormuz. So we'll see what will happen on that front. I have ran out of time. That's about it from me. I want to remind you again, Ola Prime, 20% off A1 Live is the code. Link is in the description. So just a quick summary before I let you go. Buying the yen is a good idea. This is my personal opinion. Buying the yen is a good idea. I'm doing that by selling Swiss yen. Buying gold is a good idea on pullbacks. I like Aussie dollar to buy, and stocks are doing fine. So I'm starting to buy some breakouts on individual stocks. All of my positions and the trades are in the A1 Discord, so you can join the A1 Discord if you want. Code Marco gets you 15% off. You have Tiger coming on in 30 seconds. I wish you guys a great weekend. Rest up, because next week we can get a lot more action. So that's it. Thank you. See you.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
Good morning, everybody. Happy Friday. Good day by default, as always. Getting closer to the end of the week. NFP through the dollar for a loop. So we'll take a look at that a little bit. Take a look at some, we'll take a look at the revisions and such here in a second. Guys, let me know if you're looking at anything particular. We'll definitely look at some gold, some dollar-based assets. Good morning, Safe. Good morning. And whatever else you guys want to look at. So just go ahead and pop it up in there. Keep in mind, Nick does have the Ola Prime discount code, A1 Live. If you type that in manually, olaprime.com, or the QR code there to save 20% off the account of your choice. What an NFP, Jeremy. That's right. Let's go look at that. Let's go just address the elephant in the room right away. Let's go over here to our now, it didn't change the percentages as far as the beat rate goes on the economic heat map, but or did it? Oh, that's right. We had the earnings, I think, that came out negative. Yeah, was it wage growth? Yeah, wage growth. Yeah, so that wasn't the wage growth. Yeah, it was the wage growth. Yeah, came out bearish. So yeah, actually we did drop. So we're even further down, 27%. But guys, the NFP report, that's just one of those beasts that every time it comes out, it's just all over the place. If we go take a look at this, you can see they're pretty conservative on their forecast. If you look at the red dots going through here, it's pretty smooth. But the results are anything but smooth, guys, every single time. We obviously had the forecast for, what was it, 85,000. And we went into the negative. I kind of look at this as a triple whammy for the dollar. So not only did it miss its forecasts, but then it also went from what should have been a positive number to a negative number. So that's just another psychological reason for people to add in some the sells of the dollar. But then, of course, you also had the revisions come in from last month. 57K revised, 37,000 jobs down. That in itself is a bearish look. So I look at it as a triple whammy, a triple bearish look. Again, when it came to the miss, it's not like it was a miss on the positive side. It was a miss on the negative. So it starts playing games. Last time we saw that was March 6th, where we had that ugly, disgusting report that got revised even further down when we came into the month of April and had that big push up. But there we go. A picture's worth 1,000 words as far as I'm concerned. I mean, again, every time this report is released, it's a mile away from the forecast, and then the revisions can be a mile away at times too. So very ugly, very disgusting. Pulling up the dollar-based assets over here, it kind of reminds me of the Predator guys. I know I've mentioned this before. Predator, where he's got his mouth open, he's got his ugly teeth off to the side. So the assets on the bottom are the left, the assets on the top are on the right, and it kind of gives us that funky look, like his jawline coming out. So I don't know. It's just kind of a fun visual I like to think of. Remember Arnold Schwarzenegger called him an ugly MFer on that movie. It's from the 80s. If you haven't seen that movie, especially if you're younger, you got to go watch it. Just called The Predator with Arnold Schwarzenegger. Really cool stuff, but not really cool if you're trying to buy dollar, or especially if you're long the dollar right now. Zed is just getting disgustingly smashed. Going on over here to the top setups. I'm sitting on my hands for now, guys. I'm going to wait till the volatility kind of calms down, and maybe just to reevaluate for Sunday, Monday, because the volatility is just crazy, especially with the yen and all the other misery it's that the yen pairs have experienced of late. Let's see what you got up here. Honestly, fair value gap is real, man. Don't make fun of it. Hey, look, I like fair value gaps, but not for the reason everybody else uses them. I like fair value gaps to show where the real strength is, which is usually the unfilled orders beyond them. So, no, I like to see the gaps. I just don't trade them like everybody else does. There's no liquidity, I don't think, in a gap. That's why it passes through without basing, right? And leaves that inefficiency in the markets but again, there's 1,001 ways to make money in the markets. I know of my strategy. I know it works for my strategy. There are fair value gap strategies out there. I know we joke about it here on stream at times. Yeah, I'll just leave it at that. If you're making money off of any strategy, that's all that matters. Who cares what I say or Nick or anybody, right? If you figure out a way to make money with a strategy, whether the bulk of people think it's silly or not, then yeah, just tell them to kick rocks like you mentioned there, and just go about your business and make your money. And I like it. Stand up for it. Call ball. Let's look at the euro pound. Yeah, why not? Euro pound. Yeah, so pretty well neutral at the moment. If we go take a look over here on the chart, always I want to start with the daily time, guys. So we had that pretty good push down. We have since retraced, broken some of these structures over here. They're going to look more prominent on a smaller time frame. Structure here, structure here, structure here, broken, closed above. So the moving averages have flipped around as well. I've got the 8, which is the dark red, above the 21 EMA. So we had a little bit of a death cross back here last Thursday, and it continued to push up. That's the alligator's mouth opening to the upside. Now, it did create that swing high point, and so far we still have a little bit of a lower high. So looks a little wishy-washy right now. Looks a little consolidative. Is that a word? Consolidative? I think so. So but the reality is we've got to push up price of structures, and the EMA is pointed up. So if I'm just looking at the chart, forgetting about the technical or forgetting about the fundamentals and the sentiment for a second, well, obviously I would probably be looking for some buys on this thing. Now, as far as zones, yeah, it looks like I drew one up here from that was created back on July 24th. A little bit of a gap. Okay, talking about your gaps, here we go. Okay, we do have a little bit of a gap right here showing the demand exceeded supply. I don't think this gap is that strong though. It's pretty skinny, right? This represents our inefficiency in this market at a swing low. So again, the gap is a good notation of where that inefficiency is on the other side. So I personally look at the orders, the unfilled orders from the zone itself, right? Now, I don't like this zone, full transparency, because number one, the gap was tiny. Number two, the liquidity or the volume spread analysis bars were small or green. That's average. That's just average volume. Okay. I just don't like that look for a bullish buy. It's also high on the curve. I mean, if I go draw up my curve analysis from swing low to swing high, back over here to swing low, you can see that demand is in the middle. I don't diddle in the middle. I don't like to get chopped to pieces or get stuck in a black hole, otherwise known as equilibrium, fair market value. I would prefer to be buying a zone down here. Now, that's quite the retracement. I don't think it's that strong of an uptrend just yet either. This is just kind of an infant. So, yeah, I would personally just stay away from euro pound. But the good thing is you've got a pretty good profit target if you do find a place to buy here, because your next overhead resistance or overhead supply is still quite a ways away. Euro pound is also one of the slowest moving currency pairs out there. It only moves about 26 pips a day on average. That is a very tiny range, guys. Taking a look at our ATR, average true range, currently showing 267. So just drop the last number or put a decimal point before it. That means 26.7 pips on average. That's molasses in a fridge for a long time, guys. That's slow moving. I don't, if you're a newer trader, perhaps that might be something good to test drive. If you're getting your driver's license for the first time, your parents probably aren't going to let you drive a Lamborghini. Okay. Something with a high ATR, they're probably going to put you in a Pinto or just an old beater. That would be the equivalence of a low ATR pair, in my opinion. That's just my opinion. I don't want to be, you just don't want to drive a Lamborghini and cause all kinds of damage. It's okay to get a little bit of a fender bender on a Pinto or a beater, because it ain't worth that much. So that's the way I look at ATR, especially if you're newer. Okay. Drive something that's a little slower so you can get used to it, or training wheels, if you want to call it that. And then you can kind of graduate to the faster moving pairs, the more volatile pairs, the higher ATR pairs. So anyway, that's kind of my thoughts. I don't really like it. Yes, again, by definition, that's a zone. I just think it might be a little high on the curve with no effort matching result on the volume. So there you go. On euro pound, LOL. Let's see, right at mega. Just like buying the gold and silver. Okay, safe. Yeah, let's go on over to gold and silver. Gold's obviously they're getting a spike, obviously, from this NFP report. If I can go find my gold and silver items over here, here we go. And as far as the edge finder goes, I don't know exactly what it's going to recalculate to, or if it has. Let me refresh my chart. It was at a +8, so comfortably in the very bullish territory. Silver, I think, is right there behind it. Yeah, it's a little further down. +6 for silver, +8 for gold. We do get an updated commitment of traders report today after the bell. So that'll be something we can look at on Monday morning with you guys. I always look at it on a Sunday just to kind of plot and plan for the week, see what the bank's institutions loaded up on, or see what they decreased, just to see if it matches up with some of the currencies on the top setups. That's one of my favorite indicators, guys. We got 16 fundamental indicators, a couple sentiment, a couple technical, really 5 sentiment by the time you add in Nick's new items when it comes to the put and call wall, the options flow, and the AAII investor survey that he has for the indices and the stocks. But out of all of it, one of my favorites is the commitment of traders, the COT report, because I love to see if I'm on the right side of the market when it comes to the smart money. It's not the end all be all. No, nothing on this list is the end all be all, guys. But when you match everything together, it all synergizes nicely, and that's how we spit out the score for you guys to give you permission. That's the key, guys. This is not, these scores over here, this is not a trading signal. I'll repeat that. This is not a trading signal. This is to theoretically give you permission to go look at a chart. Does that make sense? And Nick will tell you the same thing, and he says it over and over. Okay, this isn't saying go out and smash the buy button on pound Swiss. It's not saying go out and smash the sell button, the short button on dollar Swiss, right? It's just saying it gives us permission to say, hey, fundamentals look great. Smart money, dumb money relationship agrees. Technicals are looking good. Maybe the seasonality is helping us out. Maybe his moving average crossover on his trend button is helping us out. We can go now look at a chart. Okay. The neutral items, the items that you don't see listed, that's because there's usually a combination of bullish something, bullish fundamentals, bearish sentiment, or bearish technicals, bullish fundamentals, something like that, right? So anyway, but anyway, as far as gold goes, we have obviously broke out of that Bermuda Triangle a couple days ago. We've pushed through some overhead supply from the NFP today. There was also a call wall there. We also busted into yet another supply zone. That was that second zone. So this is the daily. The 8 EMA is pointing up. That's the alligator's mouth opening to the heavens, guys, saying, hey, the bulls are in charge here. So for me personally, I only have permission to buy this asset. I do not have permission to sell it, according to the my rules I set for myself when it comes to higher time frame trend, momentum, and things of that nature. So if we go down to a little smaller time frame, again, we did bust through the 395 call level when it comes to the GLD, the ETF that Nick uses for the put and call walls for gold. And then we've now bounced into the 400 level, which is this one. That's currently where we're at. It just so happens there is a supply zone just chilling right here on that same level. So if we go over here, actually it's a 1 hour now that I remember, 1 hour. So this is currently what we're fighting on gold from a technical level. We're currently fighting this supply. Okay. You can see we're already kind of pushing down if we just look at this line, but we got a basing structure. We have just a disgusting red candle with a gigantic fair value gap, okay, showing strength. Also, VSA candles, look at all that. That's red. That's ultra high volume. That is a huge indicator of institutional smart money type activity taking place that pushed this price down. Okay. We got to pay attention to the past. The past helps us out with the future. And again, when we bounced into that area, what happened? It just stopped us dead in our tracks so far. Now, I'm not saying it's going to just completely drop, but if it does, and like what Marco said at the end of his segment, if we do get a decline, I'm looking for some buys on this thing. Now, my original alert was all the way down here at the, what was it? The 4160, 4167 area. Because down here, we do have a 2 hour zone that I'm keeping an eye on. Former resistance that is potentially going to become support, potentially can become support. So there's a few odds enhancers that are in my favor, guys. Now, I drew up another zone a little higher up. And the only reason I drew that up is because, well, it broke this structure. And it basically kind of turned into its own little impulse move, right? Because, again, we broke the call wall. We broke the supply zone. We broke the swing high. But now the current level it's at is giving us trouble from that zone I showed you in the past. Okay, that zone was actually the swing high from this swing high, swing low. So the top of this curve, the top of this impulse move in the past. Origin of the strong move down. Those often have some pretty strong zones. Now, again, I'm not interested in selling it or shorting it. I'm interested to see if it has enough unfilled order potential to drop price down to my level so I can take the other side of the trade. So 4167, but again, it did form this new one here on a 4 hour time frame. I'll just delete that, clean it up a little bit for you. But when it came to, and it did have a gap. Now, this isn't the sexiest gap. I got to be honest with you. And this is part of the reason I'm really not interested in buying this this spot. That is a gap. It's just not very strong. The only other time frame when I dropped to smaller time frames that I found a gap was when I dropped from 4 hour all the way to 15 minutes. Guys, this is starting to get too noisy. This is nothing but the retail trade crowd. Okay. This does create a 15-minute demand zone by definition. It does give me a pretty decent green candle out. When it based and left us a gap. So there's our fair value gap or acceleration gap or runaway gap, whatever you want to call it, showing inefficiency, but it's on a very small time frame. I don't like 15-minute time frames unless prices, unless the context is a little different, unless price didn't push this far, right? But at this point, price pushed this far. It bounced into that higher time frame zone. So what do I trust more, a 1-hour supply or a 15-minute demand? Right? I don't trust this. Yes, it is within the context of the 4-hour. But if it would have pushed through and closed up here like this yellow line shows, this yellow projection, if it would have broken and closed, then maybe I would have given this one a chance. But so far, it's causing problems. So I don't think, when I sum it all up, I don't feel like that demand zone it has that much strength when it can't even break through that overhead supply. 4-hour, whereas this supply is only a 1-hour. Okay, so I just don't like it. I'm going to go ahead and stick with the bigger discount, the bigger pullback, the bigger retrace, and wait on that 41.67 level. Yeah, that's going to be my play on gold, guys. Nothing's changed. It's just that now I've got to wait a little longer to see if that overhead supply has the power, based off that downward strength it gave us, to push price down to my level to take the other side of the trade. Okay, so that is gold. I still like it better than silver. Nothing has changed on that front. Silver still has not given us that higher. Well, you could go ahead. Okay, so actually, I take that back, guys. The NFP did push us and give us that broken structure. But remember, I told you on silver, I don't like that overhead resistance is there, that supply. Okay, daily supply, there's a 4-hour supply a little higher. That's where our confluence point is. Yeah, it just has to jump through an extra hoop or two for me, guys. At this point, if I have interest in silver, now that it has bounced into that overhead supply, I'm going to have to see it break through the rest of it. Because our next take profit is going to be higher up. So it's going to give us a decent profit target if we can find a brand new, newly created demand zone down here for silver. But that might be a little bit longer of a wait. Who knows? So I personally am going to stick with gold because unlike silver, gold further back in the recent past gave us that higher low. Higher low. We broke through the Bermuda Triangle, okay? The downward sloping line, the upward sloping line. Now we're pushing up. And yeah, I'm going to stick with this level, guys. Former resistance becoming support. So that's going to be my look on gold. And now that I know that level's been hit, I can just go ahead and mark it lightly colored. That way I know it's already been mitigated. It's already pierced it. And we're off to the next idea. Let's see what else you guys got over here. Predator Classic. That's right, Matthew. I need to rewatch that over the weekend. It's been years. Barry Analysis. Hey, somebody else with my last name. Okay, yeah, gold. There you go. So I just went over gold. Gold is increasing up to the December, okay? What if S&P plus 10% correction, August, September? What will happen to gold? Gold and silver, it's been kind of tough. Because like traditionally, you could kind of look at gold and silver with a little bit of an opposite relationship at times, but it's been all over the place right now. I don't project, Steve. I just look at the price action. Where am I within the within respects to the current series of lows and highs structure? Are we still making higher highs, higher lows? Great. I can start looking at buys. Are we making lower lows, lower highs? Great. I can look at shorts, but I try not to cross that. Okay. That basically the structure series gives me permission to go in one direction. I'm not the kind of trader that will reverse a position and go the opposite way because inevitably one of those is going to be counter trend. So anyway, yeah, go as far as the top setups goes, don't have any indices over here at the moment. I think everything is pretty well updated at this point since the NFP. It's been about an hour and a half. We'll see if it's changed. Yeah. So yeah, pounds over. We do have the FTSE. The FTSE is still up there, but it's a +5. I like it. I like bigger numbers, but let's go take a look at FTSE. This is one I made some money on fairly recently. Let's go look at it. Reset all my goodies. higher highs, higher lows. See, this is what I'm saying. I don't have permission, according to my rules that I set for myself. I have no permission to sell this asset whatsoever. Absolutely not. One way. There's a one-way sign on all these assets, and it depends on the structure of higher highs and higher lows. Okay. So anyway, we got to push up. Now I do have a zone of demand. It looks like down here I drew up. Remember, I drew up a few zones in the past that worked out nicely that I missed on both of those. So the zone structure is working fairly well in this this impulse move, you could call it, because we broke structure, we broke supply. At this point, it looks like we broke another line overhead, another resistance point. So just like the projection line is showing here, I'm just waiting on a retracement. Let me just kind of refresh this a little bit to give you guys a understanding of what I'm looking for over here. If we get a push down. Okay, I want to see an impulse move. I want to see price base out and give me a change of character. My new impulse move on this particular projection that I made is right here, because we broke this structure right here, right? Lower lows, lower highs. Oh, all of a sudden we have a higher high. So that's a structural break. That's 50% of what I'm looking for. The other 50% is the risk that I put on a newly created demand zone if and when it forms somewhere in this general area. That's my entry right there, guys. Okay. That's my entry. After I see the bullish impulse move, which broke structure, it takes a lot of money to break structures. It takes a lot of money to break supply and demand zones, swing highs, swing lows, however you want to classify that. When we get that impulse move, when we get that structural break, I still need a discount because I am not a breakout buyer, because breakouts are often followed by a retracement to shake out the weak hands. That's where I like to look for the unfilled orders from the second chance or the newly created demand zone. And that's where I actually place my trades so I can try to profit on this move here. Okay. So I like to try to go through that example periodically with you guys. I know we get newer people in here, quite often, but the whole point is, yeah, we could place a limit order, but limit orders, it depends on your risk tolerance. My risk tolerance is I kind of micromanage my entries a little bit, maybe a little bit too much, because I do miss out on a lot of trades that would have been profitable. But the point is, I just want to see it at least start proving, hey, I'm at least trying to turn around and change this temporary downtrend. Right? That's just me. I know supply and demand traders that only place limit orders. They do quite well. But I just, I'm at home on my computer all day. I do my content creation for a couple different projects I've got going on. I have the ability, thankfully, to sit here and kind of micromanage it. Make sure I'm getting that change of character. Make sure my volume spread analysis candles are growing as price is leaving. Otherwise, I would just stick to the daily 4-hour time frames only and just leave limit orders. But it's kind of fun when you get to micromanage it all day. But it can get you into trouble too, guys, because again, sometimes I do overanalyze and I'll miss a trade just because one tiny little thing was off. Yeah, it's just like what we just saw over here. Okay? These were two trades I micromanaged, or one of them, I think I was asleep and I missed it. Yeah, that one there. This one here was over in the middle of the night, so that's understandable. I was asleep. This particular one over here, yeah, that's the afternoon for me. So just get busy. Just get busy with content and miss it. What else you guys got over here? I got a few minutes left. Tiger looking fresh going into the weekend. Yes, sir. I finally got my hair cut, Alan. Finally did. It was long overdue. Guys, I have zero excuse. My cousin cuts hair, and he only works 15 minutes away, but I just get so busy throughout the week. I kept forgetting to schedule with him because he's very, very busy. He's booked out a week or so in advance. So I finally last week remembered to schedule it, and I finally got cut. That's right. I got to look good for the pool tonight, guys. It's Friday night. My nephew, his kids, my sister, they're all coming, along with all the other pretty ladies around the area here. So we're going to have some fun. Tell me your valuable insights, future interest rates and impacts. Future interest rates and impacts. Well, depends on what you look at. Me and Alan, we're actually looking at poly markets yesterday. I think they're projecting. Well, first of all, the bond market, I do believe, is projecting. Let's go look at that. That's actually a good place to maybe end it on. CME FedWatch group, guys. You can go to this for free, cmegroup.com, and then just look for the markets, interest rates, CME FedWatch tool. And this is a pretty cool indicator that shows you the probability of what's going to happen at the next rate meeting. So the September 16th meeting, which is about 5 weeks out, as of this moment, and this is a very dynamic graph, and I think it updates every 15 to 30 minutes, says that there's a 55.9% chance of remaining the same, so no change. 44% chance of raising 25 basis points. Okay, so poly markets, we were looking at it yesterday, and it was the opposite. Okay, so we kind of had that discussion about, well, do you use poly markets to factor into your analysis? And I actually had a good point, because sometimes we can overanalyze things and kind of confuse ourselves, or maybe we just have conflicting signals. Sometimes it's just good to go get a little bit of a secondary sentiment look or opinion and go to one of those betting markets, because they're putting live money. They're betting real money on there as well, just to see what the group is thinking. That's yet another retail sentiment indicator as far as I'm concerned. Well, plus I'm sure there's some government people on there illegally making money. We heard about that story earlier this year. Some government employees going on to poly markets, winning or making lots and lots of money, several $100,000 from that. But anyway, the point is, it's just another way to kind of gauge the crowd, gauge the sentiment. And he had the perfect point too. Look and see how much volume, how much volume is being, there is within that. So, yeah, I say all that to say it's too close to call for me. It's too close. 55%. That's basically a coin flip as far as I'm concerned. August 20, the next one, August or October, that one finally gives us a percentage of a rate hike. According to the bonds market guys, those guys are pretty whippy at what they do. But if you're just isolating the CME FedWatch tool, it's saying that we'll probably not have a rate hike. Most likely have one in October. Who knows? Okay. In the meantime, we have a lot of price action to trade over here on a chart. Pay attention to your Edge Finder if you guys have the top setups. It's a very good tool. If you have not gotten your Edge Finder, please check it out. It will save you hours and hours on end, a day of analysis, simplified into a one-page Excel formatted type page to give you at a glance what you have permission to look at and to ignore. Okay, so that's my pitch on that. Ladies and gents, my alarm went off. I got to get up out of here. I got a video to make. I got all kinds of stuff. Hey, peace, love, and chicken grease. Have a wonderful weekend. We'll run it back next week. Take care.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.